But my takeaway is that recession, a mild recession, is not as bearish as many people believe. When I saw that retail sales number this morning, I actually had a pit in my stomach because I knew yields were going to go up. And those yields moving up as aggressively as they have been, particularly with that speed, I think that's much more painful for investors over the next 6 months than if we got a gentle, mild recession with some rate cuts ahead. We got to change the whole way we're talking about this recession, non-recession story.
So good news is bad news, Francis, yeah?
That's one way to put it, but again, it's about magnitude. 2 quarters of negative GDP with some rate cuts, much better for 12-month returns across the asset allocation spectrum than if we come in for a so-called soft landing that keeps the Fed hiking again or at high rates for all of 2024.
Yields are up this morning by 7 basis points on a 2-year, 5.17 on a 10-year, up 12 basis points, back in the 480s on a 30-year. You can see it on the screen. Threatening 5% again, 4.95, up 11%. 11 basis points right now before I get excited. Colin Martin, your thoughts on that? Is that bond market a buy?
We still think it's a buy, but I think we have to explain what that means a little bit. It's never a binary decision when we provide guidance like that. We do think a 10-year yield at 4.8% or even slightly higher from the looks of it is attractive, especially when over the past 15 years or so. But again, it doesn't have to be a binary decision. Slowly weight in, dollar cost average. If someone or if investors are waiting for yields to go a little bit higher, that's like timing the market. If we're looking at the stock market, we're never waiting for the absolute bottom to consider going into stocks. So we look at the bond market the same way. And if you can get a 4.8% on a 10-year or 5% on a 5-year or 5.5% on the ag, that's been the way we've been describing it for our investors. The benchmark index for high quality bonds with an average yield of around 5.5%, we think is very attractive. And that's just a benchmark, because if everyone's super short term, and if you're in short term cash investments, money market funds, that's barely a bond allocation. That's more of like a cash allocation. So slowly move out, take advantage of the rise in long-term yields, but doesn't mean go all in. It's a slow allocation in there and take advantage of what are attractive yields relative to what we've seen.
Yields are up, stocks are down. We're down by 0.6%. Mike McKee has the data. Mike McKee, another upside surprise.
Reports of the death of the American consumer are exaggerated, it appears. We don't know exactly why, but people are spending, and here's what we saw when the numbers came out. A 0.7 gain in September, and August and July revised up, August up to 0.8. You can see that during the month of September and August, CPI for durable goods came down. So we're looking at a 0.6 gain for retail sales in real terms over the past couple of months. Now, what is it that's driving it? It wasn't any one thing, and I want to see if we can pull this up here. The ECAN function for the Bloomberg on the Bloomberg terminal. Go to this if you at all can. And you take a look at this, breaks down, and it's too much to talk about each individual thing, breaks down all of the categories and what they contributed. And if you go all the way over to the right-hand side, you'll see everything contributed this time. There's nothing that really stands out among the things that gained this month. So if you want to analyze these numbers, go to that ECAN function. And that leaves us with the question of how strong is the consumer going forward? You were just talking about that. Well, let me pull this chart out of Bank of America's presentation today on their earnings. They looked at what people are spending on their credit and debit cards during the month. And if you take a look, you can see just over on the right-hand side, retail sales were kind of down. But go all the way left and you can see services, which are not represented really in the retail sales report, up big. So when we get that spending report at the end of the month, if this continues, we'll see some real strength for the third quarter, and people are going to have to be revising up their forecasts, which are already very high.
It's something we've had to do repeatedly through the year so far. Mike McKee, thank you, sir. More on the bank earnings around the opening bell. Sit tight for that. This line on the Federal Reserve. Francis Donald, the Federal Reserve sounded more and more like they were out of the game. Does the data bring them back in?
Well, if you look at their forecast, they expect the slowdown to not start in September. That's still Q3 data. And even those economists on the street who have been talking about recession risk, well, maybe we should be quiet until 3 weeks before we actually think the recession is going to start, because even the recession calls are really isolated around Q1 2024, which is a while to come, John. So we are in an air pocket where we're probably going to have a good macro narrative, strong growth, consumer hanging in, inflation coming down across most metrics, and a Fed that, as you pointed out, has been saying, we're going to give it some time. We feel we can back off. That is a good macro narrative. It's just how long is that going to last you? And I agree with Colin. You got to have some flexibility and not be so binary about the call here. I expect that the Fed is going to continue along its line that we heard from Fed member Logan the other day, that the increase in rates is doing some of their job for them. So you have a pocket where you can actually be more bullish on the economy, but it's very short term in our view. By the time those job numbers start to climb, which we think is more December or January, and remember, you get that data later in January and into February, that's when we're going to start to see the realized recession calls. But there's time before then. So getting your timelines right matter a lot, and contextualizing, moving away from that binary in or out is going to be really critical in the next few months.
Francis, investor hat, you talked about that small window to be bullish on the economy. Does that mean also being bullish on the market? We touched on that briefly. What's the difference between the two?
Yeah, selectively, I think right now you are in a short-term period where the better macro narrative is going to support risk assets, but to a point, because keep an eye on that rates complex. The higher those rates move, the worse the recession risk is going to become. So short-term gains for long-term pains is how I'm looking at this market. You have to get your timelines right, or you're going to end up in a lot more difficulty.
PPI, hotter than expected. CPI, a little hotter than expected. Retail sales, much hotter than expected. Colin Martin, Mary Daly, San Francisco Fed president, got this conversation started with Bramo over the last couple of weeks. If financial conditions, which have tightened considerably in the past 90 days, remain tight, the need for us to take further action is diminished. Mary Daly in the past week. Colin, what brings them back into the game?
I think if we get even more of an acceleration, especially inflation, a lot of the things you mentioned, you focused on PPI, CPI, retail sales. There's no shortage of economic data out there, but I really think what the Fed is focusing on is inflation. We're looking at sort of the short-term numbers. Year-over-year numbers make all the headlines. It's easy to point to that to make it easy for a lot of people to grasp what's going on. If we look at the recent numbers, though, whether it's core CPI or core PCE, on a 3-month change, annualized basis, we're under 3%, continuing to decline and getting close to that 2% target. Even if it stalls there a little bit under 3%, I think the Fed would generally be okay with that. What's really going to spook them is a re-acceleration, and we just really haven't seen that yet. I mean, CPI was a little worse than expected. We saw that super core segment come in a little bit hot. But generally speaking, over the past few months, it's not too much to be concerned with in our view, at least. So I think we need to really see a real re-acceleration there, maybe see wage gains pick up, but they've been trending lower as well. So for now, we still think that they can wait and see. In a vacuum, today's number would nudge them a little bit towards a hawkish bias. But if we look at the big picture right now, and especially that decelerating trend in inflation, we think they can sit back and wait a few more meetings.
Colin, Francis, stick with us. If you're just joining us, the data in America, better than expected again. Retail sales coming in hot. So bonds down, yields up, stocks lower. That's the story. Treasury softer, yields higher by 7 basis points on a 2-year, 5.16 on a 10-year, up 11 to 4.82 on a 30-year. Very close again to that line in the sand, 5% on a 30-year, 4.95, up 10 basis points. Equities on the S&P 500 going into the opening bell, about 20 minutes away. We're negative here by 0.6%. With some movers going into the open. Here's Simone.
Yeah, John, one of them has to do with hotel M&A. Choice Hotels offering to buy Wyndham for $90 a share. That's a deal about $9.8 billion and 30% above Wyndham's share price yesterday. But what we're seeing this morning reflects some uncertainty around this transaction being completed because Choice had discussed this for months. Wyndham had broken off negotiations, so here we are. Lockheed Martin also among our movers this morning. Modest beats on the top and bottom line, but we may be seeing some negativity here around their aeronautics division. Sales, which declined on the back of some disruptions in an advanced version of production of the F-35 fighter jet. Also watching NVIDIA shares. Those are lower and have gone lower over the last half an hour after a Bloomberg scoop coming out that the U.S. was restricting sales of chips that NVIDIA specifically designed for the Chinese market after the Biden administration had gone in and tightened some of its export controls. So this would be, of course, negative for sales. This news, according to a senior U.S. official. Again, this is a Bloomberg scoop, John.
Simone, thank you. Simone Foxman there on the latest. Coming up on this program, President Biden heading to Israel.
On Wednesday, President Biden will visit Israel. He's coming here at a critical moment for Israel, for the region, and for the world.
A week of intense diplomacy. Team coverage up next.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
The top names in global leadership are on Bloomberg.
The conflict between the U.S. and China has escalated so much. This is one of my greatest fears, that the small nation is forced to suicide.
Bloomberg. Context changes everything.
On Wednesday, President Biden will visit Israel. He's coming here at a critical moment for Israel, for the region, and for the world. First, the president will reaffirm the United States' solidarity with Israel and our ironclad commitment to its security. Second, President Biden will underscore our crystal clear message to any actor, state or non-state, trying to take advantage of this crisis to attack Israel. Don't.
President Biden making a high-stakes trip to Israel, emphasizing America's support and preparing to consult on next steps, according to the White House. His visit coming as Israel urges evacuations across the northern Gaza Strip ahead of a potential ground invasion. Trucks carrying critical aid still unable to cross from Egypt as airstrikes continue. Let's start with our team coverage. Ollie Crook joins us from Tel Aviv, Kelly Lyons in Washington, D.C. Morning, Ollie.
Hey, John. So, yeah, this is one of the main focuses is going to be this border crossing in the south of Gaza, Rafah, that goes into Egypt for the aid that you just mentioned, literally hundreds of tons of aid that are just sitting there waiting to get through. We've heard from the Egyptians. We've heard from the Israelis. The Israelis have said that they want to create the conditions under which this aid can finally move through, but they said it's going to take time. Their main concern is that this aid gets taken and commandeered by Hamas, and they want to make sure that that does not happen. Of course, the other point on Rafah is the fact that there are foreigners still in Gaza that many countries are trying to extract. And then there is the big and complicated question of refugees, John. And many of these Arab nations around the world have said their red line is taking refugees, which is, of course, in part for Egypt being able to take that kind of volume of people, a nation that's already struggling economically, but also at the very essence of this issue, which is people moving and being pushed out of the territory that they consider to be a full Palestine.
Kaylee, a two-part trip for the President of the United States, Israel, Jordan. What are the objectives for President Biden?
Well, he has a number of them as he leaves Washington tonight to go to Israel at the invitation of Israeli Prime Minister Benjamin Netanyahu. And John, he's making this trip at great personal risk. This is an active war zone, and yet he's doing it because there are a number of things that the president would like to achieve. First and foremost, as we just heard from the Secretary of State, this is about solidarity, underscoring the U.S.'s unwavering support for Israel. This is a physical manifestation of that. But there are other considerations here as well, considering that President Biden is making this trip when Israel is seen as on the cusp of what is expected to be a ground invasion of Gaza. There is also the concern of the fate of the hostages, a number of which held by Hamas are expected to be Americans, and the president would like to see every effort made to retrieve them and rescue them alive. Then there is the consideration of the millions of innocent Palestinian lives in Gaza. There will also be a message sent from the president about restraint, about making efforts to make sure that those innocent Palestinians are protected. This is where the humanitarian corridor, civilian safe zone conversations will likely come into play. Then there is also the concern, and we heard Blinken touch on this, of deterrence, of making sure that this does not expand into a wider regional conflict, a message being sent to the likes of Iran and, of course, Hezbollah, which is another Iranian-backed terrorist group. The U.S. already has been trying to send that message of deterrence by dispatching aircraft carrier fleets to the region, but Biden also, of course, is going to be sending that message by physically visiting the Middle East. And of course, that second part of his trip, John, after Israel, is to Jordan. He'll be taking part in a four-way summit with the Jordan King Abdullah, as well as Egypt's President El-Sisi and the Palestinian President Mahmoud Abbas, about really trying to make sure that this crisis is contained as much as possible.
Kelly, thank you. Alongside Ollie Crook. Ollie, as always, buddy, stay safe. Joining us now is Francis Donald and Colin Martin back with us. Francis, is it a mistake to view this as a problem for the Middle East and not a problem for the global economy?
Oh, that's a big question, John. I think right now what we're looking at is the extent of uncertainty. So you're asking a question that an economist or even a strategist doesn't know the answer to. How does that filter into the market view? Well, it's lifting up that term premium, and we've already heard from Fed officials that lifting up of that term premium and rates moving higher reduces their job, but it also clouds the outlook. So we have to apply larger confidence intervals. We've been talking all this morning about how we're not really sure how economic relationships work in this post-COVID environment. Now we're adding on a massive geopolitical tragedy on top of it, and that is clouding the outlook. So again, we've talked about it, but having a wide confidence band, working with scenario analysis, and as asset managers knowing how we're going to react in a variety of situations is effectively the only way forward.
Potentially dealing with the second big military conflict in the last 18 months. Colin, let's work through this together. The comparisons between now and the 1970s, energy security in America, far better, relatively speaking, in the minds of many. Crude output in America right now through 13 million barrels of oil a day. Record highs. But when you look at the budget deficit, Colin, there are some people who believe this fiscal position is a vulnerability. Colin, do you believe it is?
You know, I think it could be. You can't deny that deficits are rising, Treasury supply is rising. At the same time, we're seeing interest rates rise, which means more money needs to be spent on servicing that debt. And I think that kind of poses a risk to the broader economy, both domestically and abroad. Whether you're a government, whether you're a consumer or a corporation, you need to make decisions when you have a rising debt load and a rising interest rate environment. And where does the government allocate resources? How can they handle their budget, knowing that they have to service the debt? They need to remain current there. So I think it does pose a risk there. I think that's a key driver, or one of the key drivers at least, as to why we've seen yields move up lately. We've seen increased Treasury supply based on the rising deficits. At the same time, we're seeing the Fed's QT continue. And while it's been happening a little bit behind the scenes because the monthly maturities kind of fluctuate, but at the end of the day, we're looking at a balance sheet that's about $1 trillion less or more than where it was about 15 months ago. And so someone needs to step up to buy those bonds. And that's, I think, why we've seen yields adjust higher. They've adjusted higher to attract new buyers to come in to fill in that gap that the Fed hasn't been able to take care of.
Hey, Colin, thanks for being with us alongside the brilliant Francis Donald. To the both of you, appreciate it. Going into the opening bow today, not about the deficit, all about the data. The economic data in America, retail sales better than expected, manufacturing production better than expected, yields higher, stocks lower. Coming up, the morning calls in later. Max Kettner of HSBC said it's time to load up on risk assets once again. That conversation coming up shortly. Your opening bell, 7 minutes away.
What do you worry most about your economy in Greece? And when you look at tourism, it's booming, but it also means some of the islands are overcrowded.
Exactly.
Is there something that you can do about that?
Thank you for asking this question, because I want to make sure that, in 5 years from now, we will not have sacrificed, the beauty of our sort of natural environment at the interest of a very rapid growth. So that's why I'm really focusing on sustainable growth. That's why I will always push for quality over quantity. Very strict in terms of standards. We are actually looking at our local and regional sort of planning legislation across the country to make sure that we know exactly what we can build and where we can build it. There are parts of Greece which have reached saturation point, and if we have to place restrictions, we will, in order to protect, especially islands, which are more sensitive.
Equities lower. Let's get you some morning calls. First up, Goldman upgrading Dollar Tree to a buy 137 price target, noting the retailer's strengthening earnings growth potential. Wells Fargo initiating coverage on the home builders, naming D.R. Horton a top pick due to its impressive balance sheet and attractive margins. And finally, Truist cutting its Netflix price target to $4.30, seeing downside risk to subscribers due to the hyper-competitive landscape. As stock is just about positive 0.1%. Up next, bank earnings keep rolling in with big tech results from Netflix and Tesla on deck. That conversation up next with Max Kettner of HSBC. Your opening bell up next.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about, like, how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
This is Bloomberg.
decent, solid, nice day of gains on the S&P 500 yesterday, taking some of that back this morning. Session lows going into the opening bell. We're negative by 0.7% on the S&P 500. On the Nasdaq, we're down by almost 1 full percentage point. The opening bell rings in New York. Switch up the board and get to the bond market. Yields higher by 12 basis points. Your 10-year 4.8257. The data better than expected. Retail sales looking good. Yields up, stocks down. Dollar stronger. The euro 105.50 in the commodity market. Negative here by 0.25%. $86 and about 45 cents. About 15 seconds into this session, your equity market looks like this on the S&P, down by 0.75%. On the Nasdaq, down by more than 1 full percentage point. One sector to watch at the open, the financials. Goldman topping trading revenue estimates. Bank of America reporting their best Q3 results in at least a decade. Brian Moynihan, the CEO, saying this: our team delivered another strong quarter. We did this in a healthy but slowing economy that saw U.S. consumer spending still ahead of last year, but continuing to slow. Katie Greifeld has more. Hey, Katie.
Hey, John. Yeah, a pretty good showing from both banks, and yet shares of both are lower this morning. Let's start with B of A, where traders posted their best third quarter results in at least a decade. Specifically, equity trading revenue jumped 10% to $1.7 billion, boosting net income by 10% as well to 90 cents a share. That is well above the analyst estimate heading in of about 81 cents a share. You also saw net interest income rise about 4.5%, also beating expectations. We open lower, shares a bit higher right now. Let's move on to Goldman, because Goldman traders, they also had a pretty good quarter. Their trading revenue was roughly flat from a year earlier, but that is much better than the 13% drops that analysts were looking for. The not so good news for Goldman, of course, came from the real estate holdings. That saw a second straight quarter of write-downs. Property investments specifically drove a $212 million loss in Goldman's equity book. And you add that to another about $350 million in impairments, and all told, Goldman saw a 33% drop in profit. And of course, that's against a backdrop of still sluggish banking and M&A activity. And you take a look at shares down about 0.5% right now.
Kelly, thank you. 2 minutes into the session, down market almost across the board. Energy, the only sector on my screen right now that's positive by 0.4%. Underperforming information technology, down by 1.6%. That's the breakdown on the S&P currently. Let's stick with the earnings. Johnson & Johnson raising its revenue outlook on stronger than expected sales from its pharmaceutical unit. The CEO saying this: we posted strong results, significant pipeline advances, and provided a solid foundation for future sustainable growth. Simone Foxman on top of this one. Hey, Simone.
Hey, John, and yet shares are down about 1% in Johnson & Johnson, and the challenge really is where these strong sales and this strong forecast are coming from. Mainly, they're coming from sales of older drugs. Tremfya, the severe plaque psoriasis drug, beating estimates, as was Simponi, the rheumatoid arthritis drug, and especially there's been a lot of focus on Stelara. This treats ulcerative colitis and autoimmune diseases. That's the company's biggest drug, but it's due to lose patent protection in early 2025. There we saw $2.86 billion versus the estimate of $2.58 billion. When we look at the broader revenue outlook for the year, the company now sees $84.4 to $84.8 billion worth of sales. It had seen $83.6 to $84.4 billion worth of sales. One of the things that analysts may also be focusing on, and we see a little bit of this negativity around, is the med tech sales. We had seen a trend of more people doing elective procedures post-COVID, and the company had reported a very good second quarter, but the third quarter was a bit disappointing, seeing just $7.46 billion versus an estimate of $7.59. One thing to watch that we're not going to get today is a study about Rybrevant. This is a lung cancer drug that Johnson & Johnson has been developing. We won't see those results, though, until October 23rd. So maybe that's why we're not actually, frankly, seeing that much movement in the shares today, John.
Simone, thank you. I'll remind you of a quote from JP Morgan's Jamie Dimon in the last week. This may be the most dangerous time the world has seen in decades. Let's turn to defense. Lockheed Martin reporting weaker than expected revenue due to delivery delays for their popular F-35 jets. The CEO is still constructive, though. Our backlog remains robust as both domestic and international orders were strong. Isabel Lee has the story. Hey, Isabel.
Hey, John. It's really the aeronautics revenue segment that's dragging the shares slightly lower as of this morning. Oh, it just flipped higher by 0.4%, but overall, earnings were better than expected, and as we know, geopolitical tensions fuel a sustained demand for military equipment. So going to that aeronautics segment, revenues fall 5% year over year, with the company saying that F-35 fighter jets faced delivery delays. So estimates were around 3.8% decline year over year. And a Pentagon Contracts Management Agency told Bloomberg that parts shortages continue to cause production inefficiencies. So as we know, John, the war in Ukraine has sparked a restocking in arms and ammunition. These include vital guns, and of course, it has provided defense contracts and Pentagon's a boost. Still, results were in line with expectations. We have Wells Fargo saying that, okay, it's in line, and we have Vital Knowledge saying this: the results were boring. They were fodder for bulls and bears. So what does that mean? I guess it depends on how you take it, but some analysts were kind of happy. Defense stocks, including Lockheed, has really rallied sharply ahead of the war with Israel and Hamas, John.
A big move in that stock over the last couple of weeks is about thank you. That stock bottomed for the year October 5th. Since then, higher by about 11%. This morning, basically unchanged. Turning to chips, the US restricting the sale of chips that NVIDIA designed specifically for the Chinese market to help export curbs that block China's access to highly advanced semiconductor technology. Ed Rudlow on top of this one. Morning, Ed.
Yeah, good morning, Jonathan. This is a big move lower on NVIDIA, down more than 5.5%, putting it on track for its biggest decline since May. As expected, because Bloomberg reported in June that this would happen, the US expanding technology export curbs now includes A800 and H800. These are the lower performance GPUs that NVIDIA devised after the US put the original curbs in place last October. The principal difference between the A800 and H800 and the H100 and A100, the kind of top tier GPUs, is that they have processing speeds that are about 70% of the top tier chips. They can still be used in the AI use case. Now they're hit by these expanded curbs. We also got what we expected in terms of the US requiring licenses for 40 other countries that China may use to circumvent those export controls. In the NVIDIA context, remember how important China is. In the last earnings call, NVIDIA stated that in the data center context, China was 20 to 25% of sales within the historical range. NVIDIA has issued us a statement here on Bloomberg Television this morning saying that it complies with any regulation or export requirements. But here's the key point. We don't expect a near-term meaningful impact on our financial results from A800 and H800 being caught by the curbs. You know, broadly, the market acknowledges, John, that they are supply constrained. Demand for their AI-related GPUs or graphics cards exceeds their ability to supply right now. But big move lower, down 5.7%, on track for its biggest decline since May.
Just one further question on China. Apple, you and I didn't get a catch up on this yesterday. Let's talk about it this morning. Stock yesterday actually finished the session only down by about 0.1%. It's down this morning by 1% and a little bit more. Your view on the reports we had in the last 24 hours, Ed, on maybe some weakness in Chinese markets?
Yeah, the Counterpoint data research and the Jefferies research, which suggests a double-digit decline from sales in the equivalent period of the iPhone 14 last year, kind of contradicts the messaging from Apple, right? You and I have discussed this at length, that in the June quarter, Apple had swung to a top-line gain of 8% in Greater China, driven by iPhone sales. Switchers, which are consumers buying the iPhone for the first time or switching from another brand, a non-Apple brand. What's really confusing is that in the early days of the iPhone 15 Pro going on sale in particular, there were long shipping delays in China, which suggested that demand was great. Now that the dust has settled and you read some of the sell-side research, supply chain constraints might be an issue here. Ironically, the picture in the United States is much improved, where we've seen a lot of weakness in the global smartphone market. So it's a really contradictory picture to what we've seen so far this year, but it is a concern given that a quarter of revenues come from Greater China.
Ed Laszlo, Caroline Hyde, Noon Eastern, Bloomberg Technology. Look out for that a little bit later. Ed, thank you. If you're just joining us, about 9 minutes into the session, equities lower by 0.6% on the S&P. Down a lot more on the NASDAQ, down by something like 1% on the NASDAQ 100. If you're looking at the bond market, big move higher in yields off the back of better than expected economic data in America. We're up 12 basis points on a 10-year, up 10 on a 30-year, up 8 on a 2-year. Constructive over at HSBC. Max Kettner has this to say. Earnings growth expectations for the upcoming Q3 reporting season look manageable. Financial conditions have now tightened significantly, which should take pressure off the Fed to hike in Q4. Max, I'm pleased to say, joins us right now. Max, let's start with the data. Is good data good news for this market?
It depends, right? It depends on how good it really is. I think it's when we look at it this morning, right? I think there's been this obsession in the last couple of months and really the last couple of quarters of talking particularly the US economy into a recession, right? So, you know, if we get sort of blowout data like we've had this morning, that certainly doesn't help the rate side. And then, you know, interest rate volatility goes up. And as interest rate volatility goes up, that, of course, does hurt the equity market. And it does hurt pretty much sort of all asset classes except for the US dollar, right, as you're showing right now. So that's really, it depends to the extent of these surprises. I would, however, say, look, when was the last time, for example, where you guys were reporting about really a streak, let's say a couple of weeks of significantly worse than expected data? It's probably been a couple of months already, right? There's this absurdly high obsession with talking the market down, equities down, and with talking the economy down. And in reality, look, things are fine. And particularly in the US, you know, the economy is just really chugging along.
Max, can we talk about the bond market equity relationship? And I'm not sure what comes first, the chicken or the egg, but maybe you can help me. Does this equity market need the bond market to stabilize, or does the bond market need equities to sell off to stabilize? What needs to come first?
Yeah, I think we need a little bit of bond market stabilization, right? So what we've seen in the last 4 or 5 years, I guess you guys have probably had a couple of guests on the show as well that have been arguing through the real rate angle, right? So real rates going up. That's really bad for equity multiples. But let's be honest, those charts, they always start sort of 2017, 2018. Before that, if you look between 2010 and 2017 and 2018, the relationship between multiples, equity multiples and real rates has actually been positive, which kind of makes sense, right? If we're saying, look, real rates up means growth is better. When growth is better, that means that people are willing to pay up, right? They're willing to pay a higher price if things are doing better. So that relationship has only really flipped from 2018 onwards, and it's broken up again about 1.5 years ago, where the relationship now is much stronger and has been really consistently for the last 3.5 years, is not between the level of rates and multiples, but it's really through interest rate volatility. So we need the pace of increase to really calm down a little bit, right? Interest rate volatility to stabilize a little bit, to perhaps subside a little bit. And as that happens, that then will actually stabilize also the multiple, because as you have a bit more certainty around where yields are eventually going to settle, that should then be pretty good also for the equity multiple.
So when you say stability, Max, this is important. We've had this conversation a few times. You're not talking about lower yields. You're talking about smaller moves.
Absolutely. So I'm not genuinely, honestly, I'm not really that bothered about 4.5% or 5%. What I'm bothered about is if someone tells me, look, I don't know where yields are going to be in a year. Could be 3%, could be 10%, somewhere in between, right? But the point is, if you look at the equity risk premium, right, and then think about it from a very top-down perspective, the point really is, if you have in the equity risk premium a bigger uncertainty around the second term, so really around your bond yield, the stuff that you subtract from the earnings yield, what you need is you need a higher earnings yield to basically compensate for that higher uncertainty around yields, right? It's not necessarily the yield itself, it's the uncertainty around where that's going to settle. And as that uncertainty goes down, that also then means that you need not as much of an earnings yield anymore. And that means it's good for PEs, right? It's good for the multiple then.
Max, I want to squeeze this in. Constructive all year, I've got that. Based on the year-to-date performance, right to be. Max, how would you express that constructive view right now? What's the optimal way to do that from your perspective?
Yeah, still underweight developed sovereigns, still overweight equities, maximum overweight high yield credit, right? Particularly in the US, we see pretty like very little sort of refinancing risk in 2024. Most of that only comes in 2025. You know, margins are still pretty stable. So to me, it's high yield credit, it's US equities, it's also energy still, it's LATAM equities, it's high yield credit in particular.
Max Kettner of HSBC. We've got to talk about that high yield call in weeks to come as we close out 2023. Max, thank you. Coming up on this program, another upside surprise on Wall Street.
These banks are actually making a lot of money right now. They're making a lot more in net interest income than they did last year. Trading has been resilient.
Coming up next, Stephen Bigger of Argus Research on Goldman on Bank of America.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From the world of politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power in the end.
Balance of Power. Live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee
The
Langs.
door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
That really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure. With two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers
Right.
that impact your investments and your life.
Balance of Power. Every weekday at 5 p.m. Eastern. Only on Bloomberg. Your global business authority. Business Week Radio. Live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week. Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
These banks are actually making a lot of money right now. They're making a lot more in net interest income than they did last year. Trading has been resilient. Investment banking is cyclically depressed but could bounce back. And so, a lot of these banks understand that you can't necessarily cut your way to glory. And so while we think they're going to be mindful of expense growth next year, I think that the question really is how do they, think about revenue resilience next year?
Another round of solid bank earnings. Bank of America reporting its best Q3 results in at least a decade. Goldman topping revenue and investment banking estimates. The CEO, David Solomon, saying this: "We're confident that the work we're doing now provides us a much stronger platform for 2024. Bloomberg's Shonali Basak joins us now with more. Morning, Shonali.
Good morning, John. It is a show me the money story. If you think about what I mean by that, it's not just for investors. It is the capacity to lend. What helped Goldman Sachs during the quarter? This idea that trading revenue, both on the fixed income and equity side, was helped by their capacity to lend to the buy side. Call it Goldman's siren song to the buy side. They are open for business and they are looking to lend over some leverage. Over at Bank of America, net interest income was above expectations. They are lending to the consumer. You have Brian Moynihan saying that the consumer is still strong but slowing. And when they talk about the future of net interest income over at Bank of America, yes, they say the fourth quarter, it will trough, but they expect it to grow again in the middle of next year. So both on the consumer side, they are pointing to a brighter future, even with some concerns in the nearer term. And at Goldman Sachs, also for the institutions, you have David Solomon pitching the return of mergers and acquisitions, and they will be there to catch the ball when it lands. Now, Goldman Sachs is, according to Bloomberg's own league tables, back on top of that M&A league table. It was a stiff competition all year long, but they are trying to show you that Goldman is still Goldman.
Shonali, thank you. Goldman right now negative by 0.1%. Shonali Basak, always brilliant on the bank earnings every quarter. Let's continue the conversation with Stephen Bigger of Argus Research. A buy rating on Bank of America, a hold on shares of Goldman. Stephen, I want to go straight to B of A. Let's talk about Bank of America. What is it that's held this stock back all year? And do you see anything in the numbers, the communication from the bank this morning, that turns that story around?
Yeah, good morning. So, yeah, strong results, I think, and mostly across the board, right? Net interest margin expansion versus the second quarter. You know, we've been looking for lower margins because of the higher deposit costs. We had some loan growth. Deposits actually rose a little bit, you know, flat to slightly higher. So that outflow has stopped. So I think, you know, a lot of good pieces to the story here. Still some concerns about the securities portfolio and the held to maturity. We did have quite a bit of an increase there, about 26 billion quarter over quarter, and you know, that is some concern. It's going to take some quite a while to wear off that number as interest rates have increased and put pressure on the securities portfolio.
So, Stephen, you've seen the communication from the bank this morning from the CFO expecting zero losses from that held to maturity portfolio, those securities. Stephen, I was talking about this earlier this morning. Never mind the losses. Does it hold back their earnings potential for quarters and years to come?
Well, relative to other banks, it will, and you know that probably is measured in many quarters to a few years. And I would reiterate that the holdings there vastly are agency-backed mortgage securities, U.S. Treasuries, so no credit risk here. This is just a function of them earning lower returns until that rolls off. So it does hinder earnings potential. You know, again, quarters to a couple of years until they roll off and they can get the benefit of higher rates.
Stephen, why do you think the valuation is compelling enough then to buy that bank versus another bank that doesn't have the same problems in quite the same way?
Well, I think they're spring-loaded, you know, clearly for much better earnings as those lower-yielding securities portfolio roll off. So that's one thing. It's a very well-diversified franchise. I think they can catch up with the other diversified banks, which are doing much, much better. J.P. Morgan, Citi, for example, Morgan Stanley have done vastly better stock price-wise than have the regional banks. Right now, it is cast closer to a regional bank status than it is to the diversified bank. So they will benefit as capital markets revenues improve, whether that's investment banking, M&A activity. Trading results continue to be very strong. So I think they have a lot of untapped earnings potential here that will find its way onto the income statement over the next year.
Down this morning and down something like 20%, close to that level year to date. Stephen, thank you for being with us. Stephen Bigger there of Argus Research on the latest. B of A negative by just 0.07% in early trading. Let's quickly get you some sector price action. Here's Simone.
Hey, John. Yeah, it had been a pie of red to start the trading day, except for energy sector. Now we're seeing some other sectors come into the green, but IT, information technology, still the one that's really dragging everything down. And if we look at the Philadelphia Semiconductor Index, we'll see what has been the impact of this news that the U.S. is restricting NVIDIA's new made-for-China chip sales. This was not entirely unanticipated, but NVIDIA down most intraday since late December, and plenty of other semiconductor names getting hit as well, John.
Simone, thank you. Your trading diary is coming up next.
Kept on blowing up on social media, then having a fight. It just kept on repeating itself. And at the same time, I got an opportunity to fight on ESPN, primetime TV. I said to myself, now imagine if I could do something amazing here. And then I end up knocking the guy out in 30 seconds.
How quick was that?
which then gets on SportsCenter top 10. So everything kind of went doom, 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 doom. We look at these things and hear the stories of other boxers and how they were taken advantage of.
Right.
I said, well, this is an opportunity where I could become bigger and have my own power, my own voice. So they can't just, take all my money and say that, oh, I did all this for you, I got you here. This kind of gave me, into the driver's seat, and I didn't want to be another story where, these promoters, these managers, they, pretty much screw you. So I was like, I need to do something that could give me some power.
Taking back almost all of yesterday's gains on the S&P 500, down by 0.8%. That's the price action. Here's the trading diary. Coming up, Congressman Jim Jordan expected to hold a floor vote for his speakership bid at noon Eastern. President Biden departed for Israel later this afternoon. Wednesday, more earnings, Morgan Stanley, Netflix, Tesla. Thursday, another round of jobless claims, plus Fed Chair Jay Powell headlining a week full of Fed officials ahead of the quiet period. From New York, that does it for me. Thank you very much for choosing Bloomberg TV. Good luck for the rest of the trading day. This was the countdown to the open. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg. This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong? Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean? I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, coming up, we're going to get the latest reporting out of Washington, D.C. Bloomberg's White House reporter Jordan Fabian is going to join us. We may have a speaker today, so we'll get the latest reporting there. And then in Israel, Henry Meyer, he's a reporter for Bloomberg News. He's based in Tel Aviv. He's going to join us to discuss President Biden's visit to Israel, which is scheduled for tomorrow. So we got all that reporting coming up. Plus, we'll take a look at all the markets and all the economic data coming out. The retail sales came out pretty strong this morning. The consumer looks pretty solid out there, so we'll get a breakdown there. But let's kick this whole thing off with a Bloomberg Business Flash and John Tucker.
All right, I'm not even going to start with stocks. I'll start with the yields. The benchmark 10-year, this is a jaw dropper, up 13, close to 14 basis points, 484 on the benchmark Treasury. The major stock averages, they're all lower. U.S. retail sales posting a broad advance. This reinforces the idea for higher for longer narrative from the central bank. And as surprising as today's retail sales numbers are, Greg Dako at Ernst & Young isn't so sure it will actually move the needle for the Federal Reserve.
So far, we haven't seen the type of inflationary dynamics that would be aligned with this strong growth. I think that would allow the Fed to not necessarily have to tighten further.
Right now, the Dow Jones Industrial Average 100 points lower. The S&P 500 down 32 points at 43.41. That's down 0.75%. The NASDAQ 100 down 201 points. That's lower by 1.3%. On the earnings front, Johnson & Johnson boosting its operational sales guidance for the full year. Goldman reporting trading revenue that beat estimates. The real estate write-downs dragged profit lower, though. Bank of America also with earnings this morning. They had their best third-quarter results in at least a decade. Just to run through the shares right now, Goldman shares down 1.4%. Bank of America up about 0.1% right now. J&J, that's down 0.2%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Matt and Paul.
So what you're telling me, with yields up, I'm not going to be refinancing the mortgage for the Jersey
Shore
State?
Well, to the extent that mortgage rates are closely tied to treasuries, the experts tell me, yeah, but it has a lot more to do with supply issues in the mortgage market.
All right. I mean, 6% mortgage. I mean, I'm not Matt Miller with a 3% mortgage, but I mean, some people, the mortgage rate now for bank rate is 7.8%. Yeah, I know you guys.
Bailey just got a new house. I don't know.
7 1/8.
Oh, that hurts.
Oh,
brutal.
It is brutal. Although I was talking to Sally Bakewell yesterday, she's got 9%.
No way.
Yeah. But that's in the UK.
That's in the UK.
So
all right.
I mean, it's money's money, though. It's still costing her a lot.
All right, Matt Miller, Paul Sweeney, here in the Bloomberg Interactive Broker Studio. We're streaming live on on YouTube. So head over to youtube.com and just search Bloomberg Radio. As John Tucker was just reporting, we've got some red on the tape here, particularly in the NASDAQ. But let's see what's happening underneath the hood there of these markets. We do that with Bailey Lipschultz. He's here in our Bloomberg Interactive Broker Studio. He covers all the equities for Bloomberg News. Bailey, what are you looking at today?
Yeah, hot economic data. So yields up, tech down. Looking at the information technology sector in the S&P 500, down 1.9%. Guys, using that WIRP function on your terminal, WIRP, right now about a 58% chance of a rate hike from the Fed by the end of January. What? That number was 39% yesterday.
Whoever invented this WIRP thing, I'm just not buying it anymore. I've lost all confidence in it.
But one of the worst performers, biggest drags on the S&P 500, NVIDIA right now down 6%. This coming as the U.S. restricts the NVIDIA made-for-China chips in a new sale rule. The company came out saying they don't expect a near-term impact, that they have been following kind of the guidelines set out by D.C., but that is really keeping investors away from some chip makers. You're looking at the SOX index, ticker SOX, down as much as 3.1%. So maybe a double pressure from both sides with investors getting out of technology and the headline risk.
You know what's important here at Bloomberg Media is perspective, putting things in context.
Right.
NVIDIA down 6% today, as Bailey was just reporting. It's up 196% year to date. Little context, right?
Yeah, for sure.
Well, I mean, and then you're looking at Apple down 1.8%, Amazon down 2.5%.
Yep,
so some of your best performers, to your point, in the technology space, taking it on the chin today. Keeping an eye on hotels. Choice Hotels International offered $9.8 billion deal to buy Wyndham Hotels. Deal did not get across the finish line, but one thing to keep an eye on, we have Choice Hotels right now down 3.7%, ticker CHH. Wyndham Hotels, ticker WH. Rallying this morning, up right now 11%. So could shake out in the affordable hotel space, but keeping an eye on that.
And then the M&A advisor to Choice Hotels, Moelis & Company and Wells Fargo. And none disclosed yet for Wyndham Hotels. We'll see who they hire up there. Kenny Moelis.
Yeah.
Credit Suisse bought DLJ. Kenny Moelis is one of the top bankers. Well, was one of the top bankers.
Maybe one of the reasons that Credit Suisse bought DLJ.
And he, along with all the other stars from DLJ, walked out like 15 minutes later.
Yeah.
So it was like
they were like, those guys are doing great. Let's buy their bank. Yes. And they were like, thanks for buying us. See ya.
See ya. Yeah, that was not a good transaction for my boys at Credit Suisse. All right, what else, Bailey?
VF Corp, ticker VFC, maker of Vans, North Face, Dickies, JanSport, up as much as 11%. This coming after activist investor Engaged is said to take a position in the company. Size and scope matters. To Paul's point, VF Corp down 41% in the last 12 months, even after today's rally. So activists obviously circle beaten down stocks, and it seems like that is the case, at least according to our Crystal C. So seeing investor interest in VF Corp this morning.
But in general, we're looking at indexes down, giving up all the gains essentially that we made yesterday because rates blew out, because retail sales were so strong. This economy, I mean, and not just retail sales, right? Didn't we get some production numbers out this morning at 9:15, I think? Yeah, industrial production, right? Up 0.3%. We were expecting to be flat. So retail sales, the economy is just so strong that, I mean, throw away the WERP function for a moment. The market is worried that the Fed is going to hike again.
Yeah, and that's back on the table again. Whether or not you want to ascribe a 58% chance or not, that's the big thing that investors are focused on. We still are in a market that's so heavily driven by the Fed, where interest rates are going to go. As someone who covers the equity capital markets world, that's all that is on the top of minds of investors, bankers, lawyers, you name it.
All right, well, you brought that up, equity capital markets. We had those 4 big IPOs this year, none of which have been rock stars. Birkenstock in particular has challenged here. Is anything going to happen by the end of the year, or is everybody just saying, we're just throwing in the towel and we'll wait for next year?
We had a few filers come out yesterday evening. Waystar, the biggest of them, they're in the healthcare.
Succession? Waystar Royco?
I'm trying to pull it up. They're in the health application space. But the big thing when I talk to my sources are the expectations around a government shutdown next month is going to either push companies to file this week, or after that, issues and DCs are kind of pushed through.
I didn't even think of that. Okay.
And so that's one thing that's top of mind. And then if you take into account that if you're waiting until trying to get a deal out the door in December, where markets are at, muted optimism, cautious optimism, but that's really been kind of the topic and the flavor that we've been getting from investors and bankers for the last 6 months, and it's really a day-by-day kind of turn.
All right, Bailey Lipschultz, thank you so much. We appreciate that. Bailey covers all the equity markets for Bloomberg News. I want to get down to Washington, D.C. Lots going on there today. Jordan Fabia joins us. He's a White House reporter. Jordan, we're going to get to the House in just a minute, but your beat, the White House, President Biden announcing that he's going to Israel. Man, that seems risky to me. I mean, the airport's under fire. We were just talking to Admiral Stavridis, and I just asked him, can we get a bunch of our good Navy fighter pilots that are in the region to accompany Air Force One here, because this sounds risky to me.
Dude, they always have fighter pilots accompanying Air Force One.
Good. I mean,
they don't fly without them.
I'm glad they don't. No. Especially in Israel there, get some of our good Navy pilots up in the air. So talk to us about the kind of the political calculus here for the president.
Yeah, it's definitely a risky move, but his decision to go into an active war zone on this short of notice shows how high the stakes are for the president and for the region. The U.S. is Israel's greatest ally. The president has closely aligned himself with Israel in the wake of the massacre by Hamas, but he also wants to make sure that in this offensive that Hamas is going to launch, that there's some guardrails are put on, that Israel's trying to limit civilian casualties, that they will allow humanitarian aid in, that they will allow any civilians who want to leave. This has the and also limit the scope of this conflict so that it doesn't become a wider regional war. That's the last thing that the president wants heading into a re-election.
So it hasn't really been just in the wake of the terrorist massacre that we watched over a week ago, right? President Biden has always been a staunch supporter of Israel. And this, while I don't want to downplay the horror that, Israelis faced, or the tragic conditions that a lot of Palestinians, that millions of Palestinians now find themselves in, this is a very strong political opportunity for President Biden, isn't it? Because he gets to show his strength at a time when that may be questioned due to his age, and at a time when he's going into a re-election.
There's definitely something to that. That's definitely the subtext here. If you look at how his operation handled his unannounced trip to Ukraine when he walked the streets of Kyiv with President Volodymyr Zelensky, his campaign turned that into an ad that showed, what it said was the strength of quiet, strong leadership. So, they're definitely going to leverage this to show Biden's leadership on the world stage, and like you said, try and push back against some of those questions about age and stamina by showing this 8-year-old guy can get on a plane on short notice and go into an active war zone and sort of wave the flag for the U.S.
Hey, let's just switch gears a little bit. Jordan, are we going to get a Speaker of the House today, do you think?
It's looking that way. Jim Jordan, who's the Republican nominee, has seemed to have turned some one-time Jordan critics into supporters over the past 24 hours. And the House is going to vote later today on his speakership. And there still are some Republican holdouts, but he's been able to turn a lot of them so far. And so if he continues on that track, he could very well be Speaker by the end of today.
Wow. That's, what would you say are the chances, Jordan? I don't want to put you on the spot. I know you're a reporter, and not necessarily a professional analyst or a lobbyist, but does he have really a decent chance, over 50%?
I maybe would put it 60-40. I mean, don't go to Vegas and put your money on it. But look, I mean, he's the number of people, Ann Wagner, I'm thinking of Mike Rogers, people who were saying they were hell no, in quotes, on Jim Jordan are now saying they're going to support him after talking to him. So, as unlikely.
But he's an isolationist. He's like a proclaimed isolationist. He's a member of, didn't he start the Freedom Caucus? Like, the last thing they want to do is give money to other countries to defend themselves. They're already angry about Ukraine. Why would they want to give money to Israel?
Yeah, and not to mention his role in the January 6th insurrection. He was in touch with Donald Trump and Mark Meadows, the then White House chief of staff. So he's distrusted by a lot of people up there, including some members of his own party. And in order to be an effective speaker, he's going to have to, convince people he's going to, deal fairly on things like Israel and Ukraine and government funding bill and these very weighty matters the House needs to deal with.
Jordan, is there any reason to believe that whoever the next speaker is, if it's Mr. Jordan or someone else, will be in any better position to govern or to even get the Republican Party going in the same direction? Because it seems like that far-right caucus is so influential. Is there any reason to believe the next speaker will have any more success?
I don't think so. I think once the speaker's in place, whoever it is, that person is by nature going to be attacked by these ultra-conservative members who just seem to be against whatever the quote-unquote establishment is, no matter who it is. They don't seem to be really interested in governing. And I think Jordan, even though he sort of is cut from the same cloth, once he's in that speakership, it becomes a different game. He's going to have to by nature, he's going to have to cut deals with the Democratic Senate and President Joe Biden if they want to get anything passed. So that he sort of gets into the danger zone right there.
Has there been any talk of Jim Jordan's failure to protect wrestlers at Ohio State from a sexual predator? I've seen a number of stories on this recently, and NBC News had a piece a couple of days ago from a number of wrestlers who said that when Jordan was the coach there, and I'm from Columbus, so this is why.
He was the coach of...
Yeah, he was actually a pretty highly vaunted wrestling coach at the Ohio State University. But some students there, a number of them have said, why would you want a guy as Speaker of the House who failed to protect students against a sexual predator at OSU?
That's right. And so, the backstory there was that there was a team doctor who was accused of sexually abusing the wrestlers, and that Jordan, as the assistant wrestling coach, basically didn't raise any concerns and covered it up. And I imagine this is going to be a big issue if and when he becomes speaker. As you mentioned, those former wrestlers of his were speaking out. There's active lawsuits ongoing, so he could have to get deposed as the sitting speaker of the House in those lawsuits. And again, it just goes to the notion that a lot of people don't trust Jim Jordan, and also it's true that once he becomes speaker, all of these things about Jim Jordan, all these controversies like the Ohio State wrestling scandal, the January 6 matters, are going to be under an even hotter spotlight because of the nature of his position.
Jordan, give us the kind of how this is going to play out today. What's the timing of the various votes, and what should we be paying attention to?
The votes are going to be happening this afternoon. I don't know the exact time that's going to happen. I'm not sure they do either, but I don't know. One thing to watch for is whether there's going to be a challenger that comes up, if someone's going to throw their hat into the ring on the Republican side, or if this is going to be a pure up or down vote on Jim Jordan. And also look at those moderates, those members that are still holding out, like Mike Lawler, Jose Diaz-Balart, or Mario Diaz-Balart, excuse me. Are they going to fold, or are they going to hold out? And if so, will it be enough to deny Jordan the 217 votes he needs to become speaker?
All right, Jordan, thanks so much for joining us. We really appreciate getting some of your time. White House reporter Jordan Fabian, he is down in Washington, D.C., and again, expected to get a vote on the speakership today, Matt. And the question is whoever gets there, what can they get done once they're in the speakership? Because, boy, there's a lot to get done, like funding the government and to just start off with.
And I think it's pretty amazing that a handful of congressmen, throughout the last speaker,
right.
And the majority of Republicans thought he was okay.
Yeah.
Maybe even some Democrats, but they threw him out as well. Now you're going to have the majority of Republicans go along with Jim Jordan because this handful likes him, and because he can, in a sense, I guess, control them.
I guess.
But also he's one of them.
He is. We'll have to see how that plays out. We'll have full coverage. This is Bloomberg. Let's get some company news right now. Elisa Mateo.
Thanks, Paul. More banks continue to reap the benefits of the Federal Reserve's interest rate hikes. Bank of America traders reported their best third-quarter results in at least 7 years. Bloomberg Intelligence senior banks analyst Allison Williams has more on what else stands out.
Credit losses coming in better than expected. Again, this is a common theme this quarter, but also important for Bank of America. Their strategy under Brian Moynihan has been responsible growth, and so I think that's also a part of their story. Trading better, net interest income better, credit but better. Those are sort of common themes.
Shares right now of Bank of America are up about 0.5%. To Goldman Sachs now, which reported FICC sales and trading revenue for the third quarter that beat estimates. Bloomberg's Katie Greifeld says the bad news comes from real estate holdings.
That saw a second straight quarter of write-downs. Property investments specifically drove a $212 million loss in Goldman's equity book. And you add that to another about $358 million in impairments. And all told, Goldman saw a 33% drop in profit.
Shares right now down more than 1.5%. Now, meanwhile, Goldman CEO David Solomon is in the spotlight for another reason, his side gig. After unwanted media attention, Solomon has stepped aside from DJing at high-profile events. A Goldman spokesperson tells the Financial Times that Solomon hasn't DJ'd an event in well over a year. Those are the company stories we're following this hour. We'll have more of Bloomberg Markets in just a bit. I'm Lisa Mateo, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker at the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks are lower, but the major average is pairing some of the earlier losses right now. And data in the driver's seat this morning. Retail sales posting a broad advance in September. Factory output rebounded. 8 of the 13 U.S. retail sectors gaining, including restaurants and auto dealers. So it all suggests household demand holding up despite nagging inflation. That other report shows September factory output reversed an August decline. Right now, the S&P 500, 14 points lower. That's down 0.3% at 43.59. Dow Jones Industrial Average, 49 points lower. The NASDAQ 100, the tech-heavy NASDAQ 100, 116 points lower. That's down 0.8%. The real action in the bond market, the 10-year yield, 12 basis points higher. That is at 483 right now. And the information technology worst performing industry group right now, the S&P 500. That's where you're going to find shares of NVIDIA, the U.S. restricting the sale of chips that NVIDIA designed specifically for the Chinese market. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. Matt Miller, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. So head over to youtube.com and search Bloomberg Radio. We'll talk about a diplomatic full-court press. U.S. Secretary of State Antony Blinken in Israel for the second time in like a week. Now we've got news that tomorrow President Biden will be going to Israel as well. Let's get the latest on kind of what this means for this difficult situation. Henry Meyer joins us. He's a reporter for Bloomberg News based in Tel Aviv here. Henry, it seems like the United States, obviously the top political folks making their way to Israel to try to, I guess, improve a very difficult situation. What's the feeling in Israel about President Biden coming over tomorrow?
Well, clearly, it's seen, first of all, as a signal of U.S. support at this really critical time for Israel. They've been preparing now for a ground offensive into Gaza, and the U.S. has been pledging, military support and also saying that it supports Israel's right to defend itself in the face of a lot of criticism now of the bombing which is taking place in Gaza, and concern about the civilian casualties that will result if Israel does indeed decide to send ground troops into Gaza.
What is the status of that right now? I mean, I imagine they're still all amassed at the border. They've swept as many or pushed as many people from the north of Gaza down to the south in order to get in there. Is it imminent? I mean, are you hearing anything about the timing of the invasion?
I mean, what we understand is that, it is planned to take place imminently. I mean, clearly, it's not going to take place while these visits are occurring. I mean, today we have the German Chancellor who's visiting, tomorrow President Biden. But, it is anticipated that it could start pretty soon after that. At the same time, the U.S. has also been telling Israel, both privately and publicly, that it's got to do everything to avoid civilian casualties. So, it's not clear whether that will influence the type of operation that Israel is going to conduct in Gaza.
Henry, I guess here in the States, we're watching like everyone else here. One of the questions that I think a lot of folks have is how much collateral damage to civilians and others do you believe that Israel's willing to inflict in an effort to achieve its stated military goals? Is there a sense of, in Israel, how far they really want to go?
I mean, everyone that you speak to here says that, they're in a new reality now, okay. And, they have to go to the end. They have to achieve the objective. The objective is to dismantle Hamas militarily and its administrative role as well in Gaza. Of course, this does risk extremely high civilian casualties. There are already 3,000 almost Palestinians who've died in the bombing. And although, yes, they have succeeded in getting large numbers of people to move south, still, there are several 100,000 left in the north, and there are airstrikes also taking place in the south as well. So, the risk of collateral damage is very real.
Why are there airstrikes in the south? I thought they moved everybody to the south to avoid the airstrikes in the north.
Correct. What we understand is that they said there were targets that they had to focus on, their Hamas targets. So it's not that they're bombing, as much in the south as in the north, but nonetheless, that is taking place according to what we've heard.
Henry, prior to this the terrorist attack, there was a fair amount of division within Israel, profound division within Israel, due in large part to Netanyahu and what he was trying to do with the judicial system. To what extent, post-attack, has the average Israeli, do they feel more united? Give us a sense of just what it feels like on the ground in Israel, talking with Israelis on the street.
I mean, Israelis have put aside those differences for now. I mean, this is a national emergency, and the country has come together. And one of the illustrations of that was the protest movement that was raising funds to protest against the judicial reforms. Those funds have now been redirected to help the military effort. You have a government now, which is an emergency government, which includes the opposition. So yes, the country has come together.
And Henry, it seems give us the latest reporting from the West Bank. It seems quiet there. What's the latest reporting?
Well, I mean, it's quiet because the Israeli authorities, the same day that the terrorist attacks happened, launched a massive clampdown, security clampdown. So they've been, carrying out mass arrests. They have been limiting, the movement of people within the West Bank. So, they knew that was potentially going to be another flashpoint, that they could be a spillover into the West Bank. And so they have taken very, very tough measures to prevent that from happening.
What is the value, Henry, of the Israelis allowing Ismail Haniyeh to continue to live in Qatar? I mean, we talked with Bobby Ghosh yesterday, who told us.
So this gentleman,
he's the leader of Hamas.
He's the leader of Hamas, and he's now.
And he lives in Qatar, okay. And he is alive.
Okay.
And so yesterday we were talking with Bobby Ghosh, who pointed out that the Arab states' armies are not serious, fighting groups. And I imagine if Mossad wanted to go in there and take out Haniyeh, it would be no problem. Why don't they do that?
Well, I do think that, there is a benefit, I think, of still having some kind of interlocutor. There are, for example, talks taking place now on trying to get hostages out, freed. There are more than 200 hostages, Israeli hostages being held in Gaza. And apart from that, there's so much criticism now of what Israel is doing in the Arab world that I just don't think that they would want to do such an inflammatory thing as that.
I also wonder, you're in a unique position as a reporter, Henry. You were based in Moscow before this, even got, I think, a master's degree at Moscow University. So you spent a lot of time covering Russia, covering Vladimir Putin, and the beginning of the war in Ukraine. How does this play into all of that? Because my first thought was, when I saw that Hamas had committed these attacks, is this draws so much attention away from what Vladimir Putin is doing in Ukraine.
Yeah, I mean, I think you're absolutely right. The Russians see this as an opportunity. They see it as something which is going to draw U.S. attention away from Ukraine. I mean, there was already a sense that the focus was switching. You saw that when aid to Ukraine got held up in Congress, and now the sense is that, well, the U.S. is not going to be able to focus on two things at the same time, that the focus is going to be on making sure that, Israel gets the military assistance it needs, and therefore Ukraine is not going to get as much help as it was getting in the past. So very much so, yeah, from a Russian perspective, they see the tide turning in their favor.
Henry, what do you believe, or what does the average Israeli believe that they will get from President Biden tomorrow? Is this simply a show of solidarity, or is there anything particular that you think Israel really is going to ask of the president?
Well, I mean, I think the fact of his coming here is going to be seen, as making sure that Israel's enemies know that the U.S. stands with Israel, and that is particularly aimed at Iran, of course. The risk now that everyone is concerned about, and that the U.S. particularly has been trying to sort of counter that threat, is of this conflict spreading to the region, and specifically if Hezbollah, which is backed by Iran, launches major missile attacks from Lebanese territory into Israel, you could see this war becoming a much wider war in the region, with potentially also drawing Iran into it.
He's going to meet with King Abdullah, I know, in Jordan, and possibly El-Sisi in Egypt as well. Do they stand with us? Can those two countries be counted on as U.S. allies? Or, I believe they talked to Putin first.
Those two countries, have been warning about the risk, the impact that would follow if Israel launches a large-scale offensive in Gaza. They're very concerned about that. And
right.
Secretary Blinken crisscrossed the region just in the last few days to try and enlist Arab support for Israel's actions, but he was not successful.
All right, Henry, thank you so much for your reporting there. Henry Meyer, senior reporter, economy and government for Bloomberg News in Tel Aviv. Right now, let's head down to Washington, D.C. Amy Mars has got Golden National News for us.
All right, thank you, Paul. The House does vote again today on a new speaker, and hardline Republican Jim Jordan is edging closer to the votes he'll need to take the gavel. Now, we talked about this with Bloomberg's Jody Schneider in Washington, and she tells us he's gaining some ground. It's just not clear yet if it'll be enough.
He's still missing a number of votes. He can only lose 4. And last night on Balance of Power, Tim Burch, a Tennessee Republican, told us he's down to around 8 votes that he needs.
Bloomberg's Jody Schneider in the nation's capital there. President Biden, meanwhile, heading to Israel tomorrow to show solidarity and try to prevent the conflict from spreading through the region. The trip comes as American-led efforts to establish a humanitarian corridor to the Gaza Strip faltered. We talked about that with the Israel Bureau Chief Ethan Bronner in Tel Aviv.
I don't think we're seeing much yet. There's still talk about there's been water that turned on. There is some stuff coming in, and there is a small deal brewing to apparently let
let out some people out of Rafah. I'm assuming these are dual national residents or visitors of Gaza.
Meanwhile, Russian President Vladimir Putin is in Beijing, China kicking off its Belt and Road Forum, a rare trip abroad for Putin. Bloomberg's Tom McKenzie reports both Russia and China are eager to build on their no-limits friendship.
These countries are more enmeshed than they have been economically. So you're seeing, for example, exports from China to Russia have increased by about 57% just this year.
Bloomberg's Tom McKenzie following China's Belt and Road Forum from London. Greta Thunberg detained by British police alongside other climate activists who had gathered outside a central London hotel to disrupt a major oil and gas industry conference. Thunberg was led away by officers along with about 10 other activists. Global news, 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash as we look at the major indexes right now. The Dow down 26 points, appearing a lot of the earlier losses right now, 33,957. The S&P 500, 5 points lower. That's down only 0.1% right now. The NASDAQ 100, 68 points lower. Treasury yields, they surged after the retail sales increased last month by more than forecast in a pretty broad advance. This all suggests the Fed's work isn't done, keeps another rate hike maybe on the table. And with investors focused on yields, Bob Dahl at Crossmark Global says the Fed rate hikes have yet to work their way through the economy.
The Fed, I don't believe, is done. We said all along, either November or December. I think it's more likely December. But I still want to come to the point, more important than if the Fed raises rates again, is what about the impact from 0 to 5.25 in the last 18 months? We have not seen the full impact of that.
Right now, the 10-year yield, 12 basis points higher. We are at 4.82. Let me do the long bond. 30-year yield up 10 basis points, hovering just below 5%, 4.95 right now. NVIDIA slumping as the U.S. restricting the sale of chips that the company designed specifically for the Chinese market, and Bank of America climbing. Traders reported their best third quarter results in at least a decade, just as some of the earnings we've been getting. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate that. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're streaming live also on that YouTube thing. I think that's the what the kids call the internet. So you can head over to youtube.com and search Bloomberg Radio, and that's where you'll find us here. Again, John was just reporting retail sales came in this morning much stronger than expected, so you can't keep a good consumer down, it doesn't appear. So I want to see what this really means for the global macro environment here. Russell Price joins us. He's the chief economist at Ameriprise Financial. He's based in Detroit, Michigan, but he is here in a Bloomberg Interactive Broker studio. We appreciate that. Russell, thanks so much for joining us here. Again, the retail sales numbers come out pretty darn strong. This consumer, you can't hold this consumer down. How did you read these numbers, and how does that kind of weave into your economic outlook?
Yeah, certainly it's further upside that's likely for third quarter GDP. But retail sales, it shows that consumers still have a lot of money available to spend. Even if they don't, maybe they're adding it to the credit card. And they're certainly willing to spend. A big jump for this morning's retail sales came from restaurants and bars. 0.9 month over month shows consumers are still looking to enjoy themselves after the pandemic. Some of the areas that were down were even just down after big jumps the prior month. We had a 0.8 decline in electronics, but that comes after a month that we saw a 1.2% increase the month before. And so consumers are still driving this bus, and even if we have the student loan repayments beginning here in October, it's still they still seem to be spending at a good level.
Where are they getting the money, or is it credit? Because I recall at one point looking at a graph from Torsten Slok over at Apollo that showed credit card usage taking off. It scared me at the time, but everybody I ask about it says, well, we're just getting back to pre-pandemic levels.
Right.
How do you see that?
I'm not very worried about credit card debt because, yes, we are at an all-time high. But just because of the way the Federal Reserve measures credit card debt gives it a natural upside bias. It measures it on average monthly base on an average monthly balance. And so the more and more we as consumers use our credit cards, the days of emergency use only, those days are long gone. It gives it a natural upside bias. So what I do, there's no real way to factor that part out. But what I do is I look at consumer credit card debt relative to overall consumer income. And on that basis, we are at very healthy levels. We're well below what we were pre-financial crisis, 2009, 2010 timeframe. So even though it's at record levels on a dollar basis, it's still very manageable.
I mean, to me, it would be worrying to roll over any debt at what are rates on credit cards?
People are just putting stuff on credit cards and then not paying them off every month with 25%, 30% rates? That doesn't sound like a smart decision.
Well, even if you pay it off at the end of every month, just because your average monthly balance is higher, it's still higher. So that's why it boosts
now I'm coming along with you. Now, now I'm getting on the same page here. I see. So that doesn't sound like I mean, if you looked at what I charged every month, you would be probably shocked.
I'm sure you have a huge cash burn with your lavish
It's massive. And I mean, probably spend, like a good American, more than I earn, right? But I do pay off the balances because I don't want to get hit with that interest rate cost.
Hey, Russell, are we gonna see a recession here, and if so, how deep? I mean, I personally, for my forecast, I've taken that off the table. Although no one cares about my forecast, they care about your forecast. What are you thinking about that?
Well, I think the most likely path still implies that we're likely to avoid a recession. But as we were talking earlier, I think the negative influence of higher rates are still to be seen as their full impact on the economy, particularly when it comes to small businesses, refinancings, office refinancings, and auto loans, things like that. So there's still more pressure to come. So we do expect the pace of economic growth to downshift over the next few quarters. And as such, it really wouldn't take much for that downshift to push us a little bit lower if we were to see something such as a spike in oil prices to boost gasoline prices. To push us into negative territory for a short period of time. So even if we do see a recession, I think it would be very shallow, and it would not, what's most important in most people's mind, it would not likely push the unemployment rate up beyond 5%.
What's your view of, federal spending to me seemed to be moving at cross purposes with what the Federal Reserve was trying to do, right? I mean, we're just pouring money on this economy out of Washington, D.C., as the Fed is raising rates to try and slow down the economy. The bond market seems to be a new player, though, involved in this. As they drive up rates on the long end, is that tightening financial conditions enough?
Well, it certainly is, clearly. But I do think we will start to see some alleviation in the upward pressure in market-based rates, Treasury rates in particular, because part of the boost that we've had over the last few months was from the Treasury Department rebuilding its checking account. Back in June, we had the Treasury balance down below $40 billion, and now it's built back up to over $640 billion. So the checking account is largely rebuilt. Usually they keep that at a level between 300 and 500 billion, so it's pretty flush today. So that component should alleviate. We still have obviously deficit spending and the Federal Reserve working off its balance sheet, so there's still a lot of upward pressure. So once we see further confirmation that inflation truly is subsiding, and I think that's what the market's waiting for, is further confirmation of that data, that we should start to see rates moderate a little bit. Not
but
much,
we're on, 5% watch out 30 years, right? The 30-year right now, 4.949%, up 10 basis points today. The 20 year has already been past 5%. So does that, you think, is that a high watermark for yields?
I think it will end up being close to it. I think we'll probably be at these levels for a little while longer. But again, as we move into 2024, the inflation outlook starts to get a little bit better. The Federal Reserve indicates that they're more on pause. I do think that we'll see those rates come down a little bit, maybe somewhere between 1/4 and 50 basis points. So they'll come down somewhat. That'll alleviate some of the concern about the economic environment, and I think we'll have some upside for 2024 overall.
Hey, Russell, just real quick, you're based in Detroit. A lot of your fellow Detroit folks are on strike here. When are they going to work something out here between the auto companies and the auto
Yeah,
workers?
that is a very difficult question. Certainly, I don't have much insight into the negotiations by any means, but it is something that's a rolling pressure on activity in the area. Fortunately, we didn't see much of that in today's industrial production report.
That's right. Yep.
Manufacturing activity still expanded, but certainly the auto industry needs to see that resolved sooner rather than later.
And you guys have a football team this year.
That's a very good. That's a good.
That's a big one.
What, the Lions?
Yeah,
that's right.
That's the NFL, Matt.
That's okay with me.
Okay.
As long as we're just talking about the Lions and the NFL.
Yes, that's all you need to know. Russell Price, thanks so much for joining us. Russell Price, the chief economist for Ameriprise Financial, joining us live in our Bloomberg Interactive Brokers studio. Let's get some company news right now with Lisa Mateo.
You got it, Paul. Johnson & Johnson has raised its 2023 revenue outlook as its drugs business came in slightly ahead of expectations. Bloomberg's Simone Foxman has the breakdown.
Tremfya, the severe plaque psoriasis drug, beating estimates, as was the Simponi, the rheumatoid arthritis drug. And especially, there's been a lot of focus on Stelara. This treats ulcerative colitis and autoimmune diseases. That's the company's biggest drug, but it's due to lose patent protection in early 2025. There we saw $2.86 billion versus the estimate of $2.58 billion.
Now, J&J split off its consumer unit in the third quarter, leaving just the pharma and medical technology businesses. Shares right now of Johnson & Johnson down more than 1%. And Rite Aid is moving quickly to sell its assets in bankruptcy because lenders who are financing its reorganization have deadlines.
That's what an attorney for the chain told the judge. But another attorney for a potential bidder, described as a household name, says more time is needed to put together an offer. Rite Aid has agreed to sell its pharmacy benefit manager business. It also plans to close more stores after shutting down hundreds before filing for Chapter 11 protection.
And that was Bloomberg's Gina Cervetti reporting. The buzz surrounding weight loss drugs is getting bigger to the tune of $100 billion. That's what analysts at Goldman Sachs are predicting for the potential market opportunity by 2030, which hit about $6 billion in annualized sales earlier this year. They say Eli Lilly and Novo Nordisk will capture about 80% of the obesity market. Right now, Eli Lilly shares down nearly 2%, Novo Nordisk up just a fraction. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Matt Miller and Paul Sweeney live here in a Bloomberg Interactive Broker studio looking at these markets here. We got a little bit of a red on the screen here. Not going to oversell it at all, but the S&P 500 off 0.25%. NASDAQ off about 0.4%. Looking at the yield space, that's kind of where we're seeing some action there. The 10-year Treasury, the yield's up about 12 basis points, 4.82% on your 10-year Treasury. WTI crude oil now inching just a little bit higher, up about 0.5%. We're at $87 a barrel for WTI crude oil. And Tom Keene's not here, so I'll quote Bitcoin. It's up fractionally, just 28,400 for Bitcoin for Tom Keene. We'll get them that quote there. Right now, let's head down to Washington, D.C. We'll get world and national news with Amy Mars.
All right, thank you, Paul. President Biden is going to Israel to meet with Prime Minister Benjamin Netanyahu, and we get more on this now. Bloomberg's Kaylee Lines is in Washington.
President Biden is making this trip when Israel is seen as on the cusp of what is expected to be a ground invasion of Gaza. There is also the concern of the fate of the hostages, a number of which held by Hamas are expected to be Americans, and the president would like to see every effort made to retrieve them.
Bloomberg's Kaylee Lines in Washington. The president will also travel to Jordan for talks with King Abdullah, Egypt's Abdel Fattah el-Sisi, and Palestinian Authority leader Mahmoud Abbas as he deepens efforts to stop the conflict from spreading and further destabilizing the Middle East. More than 100 groups are urging the Biden White House to reverse its decision to fast-track border wall construction in Texas. Lakin Jordal is with the Center for Biological Diversity and says there's no reason for the administration to cast aside the environmental review process.
The president has now become the first Democrat ever to strip protections from border communities.
A federal judge ordered that construction in Starr County, which was approved by Congress, must continue. It is an environmentally sensitive area that is not considered a hotspot for illegal immigration. The head of Goldman Sachs is stepping down from the DJ booth. David Solomon will no longer spin tunes at the firm's high-profile events. More on that from Bloomberg Finance editor Tom Metcalf.
He attracted probably what I would describe as unwanted media attention. About a year ago, he decided, you know what, I will do no more high-profile gigs.
Bloomberg Finance editor Tom Metcalf in London. Solomon's side gig came under scrutiny after he played a set at a charity concert in the Hamptons in the middle of the big pandemic shutdown for COVID-19. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris, and this is Bloomberg. Paul and Matt.
All right, Amy Mars, thank you so much. We appreciate that. You know, Matt, I've thrown in the towel on this whole work from home hybrid thing. Whatever the kids want to do, they can do it. I'm just not going to play that game anymore. Then comes a story from Bloomberg News. American work from home rates dropped to lowest since the pandemic. And this is a story, folks, you got to check out on the Bloomberg terminal or go to Bloomberg.com. If for no other reason, then they've got this great interactive graph of all the states in the U.S., and it just shows what percentage have at least one person working from home. And just to give you an example, the lowest I see here is Mississippi. Only 18% of Mississippians are working one day from home, whereas I go over to the great state of New Jersey, the swamps of Jersey, that is 48.6%. People just don't want to.
Wait, this is a percentage of households that have at least one person working from home. So, for example, I would be one of those households because my wife works from home every day.
Okay.
And I think you and I come at this from very different angles. I think it's so cool that there are jobs, good, high-paying jobs where you can work from home because it frees you up to do a lot of other things. And the main thing for me is it means you don't have to commute. Think about poor John Tucker, right?
Poor John Tucker.
How many hours a year does John Tucker spend in the car? How much money does he pay for gas and tolls? How big is his carbon footprint? And that could be cut down to nothing if he would work from home.
Well, think of
and
it.
we're in
If
radio.
If I had stayed home today, I would not have taken advantage of the Bloomberg waffles.
All right,
that were out.
see?
And they were yummy.
One fewer person eating waffles. I mean, he could very easily do his entire job from home.
I know, but I mean,
and that would be so much better for the environment.
I don't know. I've been reading some good reporting on this recently, where we now have some data, fears of, and some good reporting coming in saying, hey, this hybrid thing, it's a good thing long term. So, all right, I like it. I'll buy into it, but we'll see how this plays out. All I know is Matt, John Tucker, and myself, we are here every day. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Allison Williams. She's the senior banks analyst at Bloomberg Intelligence. She is our go-to person. We've got a bunch of more banks reporting today. Goldman Sachs, Bank of America. So we're going to break it all down. Our C-suite conversation today is Julie Van Ullen, Chief Revenue Officer at Rakuten. She's going to join us to discuss the consumer health and retail purchases. And Donna Blair, COO for national mall owner Pacific Retail Capital Partners. We're going to discuss retail, the outlook for malls, and the consumer. And again, we had some blowout consumer numbers today in terms of retail sales. So we'll break all that down coming up. But first, we're going to start with John Tucker and a Bloomberg Business Flash.
All right, strength of the U.S. economy taking center stage in the market again. Yields jumping after a surprisingly large jump in retail sales last month. So that's increased speculation that the Federal Reserve may raise interest rates again. Meantime, Jonathan Stubbs, equity strategist at Berenberg, believes stocks may still be way too expensive.
From a corporate perspective, valuations and margins are still very high. So it doesn't mean equities can't go up or can't go up a lot over the next sort of few years for whatever reason, but the starting point is quite challenging.
Right now, the 10-year yield, 11 basis points higher. That's at 481. Now, as far as the major averages, the stock averages, they paired a lot of the earlier losses. S&P 500 down just 8 at 4365. The Dow down 29 at 33,951. NASDAQ 191 points lower. That's down 0.6%. Deal news. Choice Hotels offering to buy New Jersey-based Wyndham Hotels and Resorts. They're in Parsippany. I didn't know that.
Nice.
This is a deal that would combine large companies in the affordable hotel space with brands including Super 8 and Quality Inn. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Matt and Paul.
John Tucker, we're in a little state, but we got tons of corporations based in Jersey.
I mean,
we are the
Standard Oil
pharmaceutical
of New Jersey.
Yes,
think of it. It just goes on and on.
Big pharma all over the place.
Oil started in New Jersey, not Texas, y'all.
Yes, that's right. Good point, John Tucker.
Wow.
Bringing it today. John Tucker, thank you so much.
Ripping up Jess Menton before she even comes on the air.
All right, Bloomberg Markets today is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit Commonwealth.com to learn more. Jess, we love you. Jess Menton's here. She covers all the equities for Bloomberg News. We're off the lows of the day there, Jess. What's happening in terms of the equity markets today?
Yeah, specifically, obviously, when you look at NVIDIA, ticker symbol NVDA, that stock's down about 4.6% right now, but it did actually drop as much as 7.8% earlier this morning, but has since paired some of those losses. So on the back of, obviously, when you're looking at what potentially could happen here with the U.S. restricting the sale of chips that the company designed specifically for the China market. So that had weighed on other chip makers if you are looking, obviously, at the stocks.
By the way, NVIDIA's done pretty good here to date.
That stock's up. Well, I mean, at a particular point, it had been up or over 200%.
It still is up
exactly.
over 200% year to date.
So when you are looking at just a decline like that, and then also even other members within the semiconductor index, if you are looking at the stocks.
What do you look at the stocks?
Yes. So I usually typically look at that stocks. If you look at it right now, it's up close to 37% year to date. Last year, it had lost just slightly under that. So basically recouping majority of last year's losses. And last year had been the biggest decline since 2008. So clearly when you are looking in context how these chip makers have performed, even though you are seeing AMD, Broadcom, and some others lower today, like AMD, ticker symbol AMD, not surprisingly, down 1%, but actually had been down more than that. So a lot of those chip makers are actually coming off of the lows. So when you are looking kind of underneath the hood here at the S&P 500, especially the tech sector, had been down more than 1%, now down just about 1%. But then also if you're looking at what's happening with energy stocks. So if you look at that sector in the S&P 500, up more than 1%, a lot of that does have to do with oil and gas and equipment services makers. So Halliburton, ticker symbol HAL, up 2.3%. Also looking at Schlumberger, ticker symbol SLB, up 1.2%. And then Baker Hughes, BKR is the ticker on that, up about 1.5% today. And interesting enough, I was looking at so every month Bank of America's fund manager survey will come out. So I know a lot of people were looking at the cash levels this morning because they did actually boost up over 5%. So typically that's more of a contrarian indicator for them, which they use as more of a kind of on the buy as far as just maybe cash levels getting a little bit more extreme there. But I wanted to point out too what they were looking at when it comes to more specifically with energy stocks. So they have noticed that fund managers have been shifting out of staples and into energy stocks. So actually they had cut their allocation to staples in October, so it had been about a 14% net overweight in September to now it's a 4% net underweight this month. So that was the first underweight since January of 2022 for staples. So then they did end up buying energy stocks, and the allocation was actually from a net 1% underweight. Now it's actually 8% overweight. So interesting dynamic there when you are looking at energy.
So remind me, you're from Corpus Christi or Galveston? I forget.
Corpus Christi.
How big is energy down there?
Big refinery area where I am, and especially in Corpus Christi, but then also extended up to where Houston is. So Houston's 4 hours away, but there's all sorts of refineries on the Gulf Coast.
They have the big ships pull into Galveston to get their energy and then export it?
They do, but then also there's a port in Corpus Christi. So
Okay.
there's a port in Corpus Christi, and we do have ships that'll come in.
Is there an index? I mean, you talk about the S&P Energy Index, a subgroup of the S&P 500, but is there an index like the SOX index for energy companies that people tend to look at, or do we just fall back on the S&P 500?
Usually I look at the ETFs that track the energy sector. So that's usually kind of how I gauge, but usually they track pretty closely to how the underlying index level performs anyway for the S&P 500, but that's typically what I'll do. Basically, if you look at like the XLE, so that's the SPDR ETF that tracks the S&P 500. So that's something that I keep a close eye on just to see basically how overall some of these energy names are performing. But when you look at that holding for that particular one, not surprisingly, Exxon, Chevron are some of the bigger weights in that one.
All right,
So
I'm more interested in Corpus Christi. I'm a beach person. What are the beaches like in Corpus Christi?
So we tended to go more to
Oily.
South Padre because
San Padre Island.
yes, because we always felt like because they're a little too touristy on the beaches in Corpus, so we'd go
Are
to
they?
South Padre. Yeah, well, not like.
Are they nice beaches?
I mean, they're okay. That's why we go to South Padre or Port Aransas. But I'm actually supposed to be in Port Aransas because I'm officiating a wedding down there in 2 months.
Officiating?
Nice.
So I'm officiating not one but 2 weddings this year.
How are
which
you an officiating? Who are you?
I've never officiated. I have to figure this out.
Oh,
I
I've
think I
done
need
it.
to.
I've
Okay,
done
then
it.
we need to talk about this soon.
Are you an
because-
accredited what?
No, I'm not. I have to do something online quickly because I have.
You don't even have to do that, to be honest.
Okay,
I
do believe I have to sign the marriage license, though. Correct?
Wait a minute.
Yes.
Where's the priest in all this?
I have no idea. I got to figure that stuff out. I just was told
Where's
show
Father?
up, do all of these things.
I've done it twice, and I've married people that aren't down with having a priest.
Yeah,
They're not Catholic. There are people, Paul, that aren't Catholic.
Right.
You know.
So both couples aren't as religious, and so they, for whatever reason, have asked me
And
to
they've
come
asked-
lead the
oh
way.
my God.
But I've known both of the brides for probably 30 years, so we
Talk
grew
about
up together.
doomed from the start. Jess,
You better pay close attention because I'm 0 for 2 on my wedding.
Really? I was feeling pretty
ended
good
in
though.
tragedy, both of them. So I don't know how much I played into that.
Well, one of them told me I had to stay on script. The other one doesn't care as much, so we'll see how that goes.
All right,
in the
well,
next
we
couple
want the
months.
reporting on that, Jess Menton. Thank you so much. We appreciate that, Jess Menton, equities reporter, wedding officiant, go figure. We do it all here at Bloomberg. Let's talk about the banks. We had our friends at GS. That would be Goldman Sachs, Bank of America, the bank to America and the world, both reporting numbers today. Allison Williams joins us. She's our senior banks analyst. She's also the director of research for all the U.S. research stuff they do at Bloomberg Intelligence. So she's got a lot of hats to wear, so we appreciate getting a couple minutes of her time. Goldman Sachs, Bank of America, what are your takeaways today, Allison?
So it's been a good quarter. You wouldn't know it from the stocks, but net interest income, core net
I
interest
could make
income.
huge money running a bank today. With interest rates, they're paying like nothing to you and me, the depositor, and they're loaning out at these high rates.
What are the margins? What are the margins like right now?
They have actually started to pay up, and so we have seen that, right? So that's been a little bit of a headwind. That's what people are worrying about. But the cost of deposits, the rate of those costs increasing is slowing. So, Paul, you know we like a second derivative, and we like when the second.
But is there an overall number?
Right,
you know, like at Bank of America, the average deposit payment is like, I don't know, I would guess like 0.5%, right? And the average amount that they're charging on a loan is probably more like 6. I mean, what are we looking at?
I mean, it depends bank by bank. And so, and by the way, if you did your math, you'd get a much higher spread than you're actually earning on the margin. So it's really like a couple of percent, depending on the banks, depending on the mix. And we could get into the weeds and talk segment by segment. The wealth segment, for example, much closer to matching the market rate, right? So if you have a balance of a few $1 million, you're going to be a lot more sensitive in terms of moving that balance very quickly. Commercial balances, similar thing, right? People that are managing those balances are doing it for a living, so they're obviously going to move those. So in those two segments, we've seen the cost very much matching what's happening on the funding side. It's really the consumer bank where you have very much smaller balances. Even then, you would think it's, people should be moving. And Paul, you talked about your savvy daughter looking at Marcus and the highest rates there. But some people are slower to move. And if you think about Wells Fargo, Bank of America, JP Morgan, huge retail branches, tons of these mom and pop deposits, especially Bank of America and JP Morgan, gaining that share over the last several years. And so that's really the benefit is those big, the deposit base and the portion of that deposit base that pays, closer to zero.
Not the hot money, right? That was the worry last quarter, is the hot money, which means
Like John Tucker's money.
No.
Oh, okay.
I mean, and correct me if I'm wrong here, but that is basically brokered deposits, right, Allison? So the worry was that it's not just Marcus that's paying more than 5%. There are a number of other upstarts that are paying decent interest rates.
Correct.
And so you have brokered deposits that just move back and forth all over the place. And investors don't like to see too many of the bank they own, too many of those deposits brokered, right?
They don't. That's why they really look for the core deposits, and they're really looking for those super cheap deposits that live, as I said, in the consumer unit, so not the wealth or the commercial or the higher beta, as we would call it. Not beta as we know in the market, but a deposit with a high beta to the market rate.
So what are we hearing from the likes of Mr. Solomon and Goldman Sachs about just the investment banking businesses? Doesn't seem to be a lot going on over there anywhere.
So if you look at the fees, it doesn't seem to be a lot going on, but I think what investors are focusing on are some of the commentaries beneath the surface. So obviously you're familiar with the fact that there's activity, you start those conversations, and then you see the uplift in fees a few quarters later. And what was exciting in September was a lot of commentary from the Goldman Sachs and other banks that things were happening beneath the surface. We're hearing a bit more of that today from both Goldman and Bank of America. Equity fees has been disappointing. We did get a few deals, so we're looking for things to get a little bit better. Debt fees being helped out on the high yield side. And M&A, despite at very low levels, at least increasing from the second quarter.
So one of the things that I've been amazed with over the last 10, 12 years is the whole growth of the private credit business. And that seems to be actual fees that are leaving Wall Street and going to the private credit business, whether it's from the leveraged loan business or the high yield market. What are the Brian Moynihan's, the Mr. Solomon's, what do they say about that business? I mean, it seems like they just let that go. I mean, and let it walk across the street.
Yeah. So if you looked at if we looked at sort of large corporate lending, that tends to be almost like has been over the long term a loss leader for the banks. They want it more for the overall relationship, right? And then the types of lending that tend to be profitable, sort of that core bread and butter commercial business. I think that's where maybe some of the BDCs have tried to become more competitive. But the big, the business right now that's working and the business that's good for these banks over the long term is card. Because that's, the consumer business has much higher yields.
Yeah, but back in the day when I was at Chase, Allison, I'd do a big leverage loan to Comcast Cable, $1 billion loan. We'd get a big fee up front. We'd get a nice LIBOR spread. We sell off 90% of our loans. We'd have to, muddy up our balance sheet, and then we turn around and do it again. I thought that was a really good
you're talking
business.
about so leverage lending is obviously a little bit more exciting, and again, you're talking about the full relationship, right? Like you're really looking for the fees and the full relationship. And keep in mind that even when banks do loan syndications and such, like they're generally selling off those pieces as well, right? Like they're looking for the overall origination fee on that business.
So what's the outlook for investors here? Are clients you talk to, are they buying the Goldmans of the world? Are they buying the Bank of Americas, the JP Morgans, or are they just waiting to see how the economy shakes out?
It's definitely the latter. Okay. People are still very focused. Investors are very focused on commercial real estate. We know that that's something that's going to take a long time to play out. I mean, the banks we're seeing weakening, and that's what we expected, but it's going to be a slow process. I think investors definitely get concerned when some of those concerns start playing out in the CMBS market, which moves a lot quicker and, has shown some significant decline. So we know commercial real estate is coming, but broadly, credit is very strong. And investors are also still looking at those unrealized loan losses. We did see a tick up. Bank of America spent a lot of time talking about their portfolio this morning. And I think that is just something that, again, it's going to be a while. So the stocks, as I said, are not responding to the good earnings. And then we have these two concerns that are just going to take a fair amount of time to play out. And at the same time, investors are trying to grapple with what do higher rates mean? What does that mean for the economy? Credit loss tends to be the big wild card, and what's going to happen next year if these rates continue to be high.
Any most dangerous times quotes today? I mean,
well,
Jamie Dimon always makes
Jamie
headlines.
always kicks off earnings season, and he always does make some good headlines. I think the most interesting thing, if you read between the lines in some of his comments, he's continually said, at least for the last couple of years, that the world needs to prepare for higher rates. Although the number he throws out there continues to ratchet up, and so a bank should prepare for any type of risk scenario. There are a lot of there's a lot of risks out there, but he has also been saying, last Investor Day he talked about sort of detailed all the unprecedented times, and we've continued to have some risks since then.
All right, good stuff. Allison Williams, as always, Senior Banks Analyst for Bloomberg Intelligence. She's also the Director of Research for the Americas for Bloomberg Intelligence. So a busy plate. This is Bloomberg. To get some company news right now, Ms. Mateo.
Thanks, Paul. The U.S. is restricting the sale of chips that NVIDIA designed specifically for the Chinese market. It's part of a sweeping new updates to export curbs that are designed to block China's access to highly advanced semiconductor technology. We have more from Bloomberg's Ed Ludlow.
In the NVIDIA context, remember how important China is. In the last earnings call, NVIDIA stated that in the data center context, China was 20 to 25% of sales within the historical range. NVIDIA has issued us a statement saying that it complies with any regulation or export requirements. But here's the key point. We don't expect a near-term meaningful impact on our financial results.
Now, NVIDIA right now down about 4.5%. A big hotel deal could be going south. The Wall Street Journal is reporting Wyndham Hotels has rejected an offer from Choice Hotels International to buy it in what it would have been a roughly $7.8 billion takeover. Now, Choice was offering $90 a share in a mix of cash and stock. Now, executives say the bid undervalues Wyndham's growth potential and involves significant risk. Wyndham shares right now still up about 10%. Choice Hotels down about 4.5%. And how do you know that the reviews that you read for hotels or restaurants online are true? Well, Amazon and a group of travel websites have teamed up to help. Today, the e-commerce platform, along with Booking.com, Expedia Group, Glassdoor, TripAdvisor, and Trustpilot, they launched the Global Coalition for Trusted Reviews. And that's going to stop those imposters at the source. We'll check in with a few of them right now. We have Amazon up about 0.7%. Expedia, Amazon is down 0.7%. Expedia right now up about 2%. I'm Lisa Matei.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. This Bloomberg Business Flash. Bond yields rose. Stocks, they struggling after solid economic data that's reinforced the case for the Fed to keep interest rates higher for longer. But risk assets turning just a bit. The Dow has just moved higher. It is up 10 points right now. The leader, at least by the index points, United Health, that's up 0.7%. And the laggard is still Goldman Sachs after their earnings. That was down 0.75%. Right now, the Dow Jones Industrial Average, again, up 11 points at 33,994. The S&P 500 just 2 points lower right now. And the NASDAQ 100 down 62 points. That's a decline of 0.4%. 10-year yield, 11 basis points higher. That is at 481. Real estate brokers pocketing up to 6% in fees. That's drawing some antitrust scrutiny from the Justice Department. The regulators apparently trying to decide whether to pursue a case to dismantle the real estate commission sharing system. I don't know if everybody pays 6%. I know I recently did not pay anything because it was an all-cash deal for the folks' farm.
Oh,
sold the farm.
You sold the farm?
Yeah, cash buyer.
Nice.
Went like that.
Boom. Good for you. In Jersey? No? Where
in Jersey.
I didn't even get a look.
No.
Well, you didn't say, hey, I'm selling a farm. Do you want to take a look?
Well, this person was first in line. I mean, they initiated the whole transaction.
Cash money.
Cash. We like
money.
cash.
We like cash. All right, John Tucker, thank you so much. We appreciate it. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker studio. We're also
you know what I do
live
when I
YouTube.
get cash?
Yeah.
When I have a fair amount sitting around on my bank balance.
You spend it.
Of course, but how do I spend it? So
motorcycle?
There's things that I'm always looking for. A good place to buy clinch boots, engineering boots made with shinky horsehide, the kind you can only get out of Japan from one tannery there that makes the best horsehide in the world. Or if I'm looking for jeans, I'll go with Samurai denim, and I like 25-ounce Samurai blue jeans, made the old-fashioned way on looms that Americans sold the Japanese a century ago.
All right, so let's just go.
Or I like the real McCoys. The best place to get flight jackets like A2s or B3s that are like perfect compared to the old ones, only much higher quality in terms of the leather and stitching. All of this stuff comes from Japan. So how do I get it?
Rakuten.
That's right.
Boom.
There's a website that I use to buy all of this stuff. I've grown up saying Rakuten, but maybe it's Rakuten.
Let's ask our next guest.
Yeah, let's do that.
Julie Van Ullen, she's the Chief Revenue Officer for Rakuten. Who pronounces it right, Julie?
Rakuten is the way to go.
All right, well, I've been using it for years, and Paul has never heard of it. So talk to us about the other things that you can do on your website, because you're the Chief Revenue Officer there, which I guess means that you're in charge of making more and more money. And I only use it for maybe one niche part of your business. So what is Rakuten?
So, and my job isn't just making money. It's really about ensuring that all of the merchants, so the brands and retailers who use our site to have access to the loyal shoppers who go to Rakuten to start their purchases, have the best experience possible. So effectively, Rakuten offers cash back to shoppers and helps brand and retailers engender loyalty through the shopper base who uses Rakuten to shop for everyday purchases.
So give us an example, Julie, of kind of a typical retailer or that uses your site to reach your customer base.
Well, we range a vast array of categories from apparel to footwear. So you have your department stores, you have luxury department stores, so a Macy's, a Bloomingdale's. We have direct-to-consumer brands. We have over 3,500 brands on the site. We also are across the travel vertical as well. So really hard-pressed for shoppers, for consumers to come to our site and not find what they're looking for.
So give us a sense of how the consumer is behaving today. We had some really strong retail sales numbers reported by today. And what are you finding on your platform? How's the consumer these days?
Yeah, I mean, your question is actually a great segue because we see such a vast array of purchases from across a number of categories, and we've been tracking the consumer sentiment and what they've been buying over the last couple of years, of course, which has been pivoting and changing constantly given the economic conditions. But what we're seeing right now is, of course, the CPI rose a little bit, which means that consumers are still feeling tighter budgets due to inflation, especially since that core inflation is what's impacting folks. Student loan debt repayments resuming. So that's still a burden. But what we're seeing now, especially given the retail trade sales have gone up a little bit, is that they're still willing to shop, and they're still willing to shop using discretionary spending as well. So while year to date, there's been this trade down effect, whereas if you shopped at a high-end department store, perhaps you've been shopping at more of a discount department store year to date. That will continue because discounts, deals, value is definitely going to be central to the consumer mindset through the holidays. But it's interesting already to see a willingness to increase discretionary spending start to uptick, which is something that we would anticipate to see throughout the rest of Q4.
How are your customers paying for the stuff that they're buying? I mean, imagine they could do that with a credit card or the debit card. There are a million other ways nowadays with PayPal and Venmo and buy now, pay later. How are you seeing that breakdown?
So at Rakuten, we don't actually facilitate the purchase. We facilitate the consumer engaging with the brand of their choosing. So you would start your shopping trip at Rakuten, but say you're shopping at Macy's, you would shop at Macy's just as you would if you went to their site directly. And of course, most brands and retailers these days are offering an array of ways to shop and buy now, pay later.
But what is the unique selling point? Like, why wouldn't I just go to Macy's directly? Why do I make a stop at Rakuten?
Yeah, so Rakuten is a place where you get cash back on your purchases. So we have a hugely loyal base of shoppers who shop more frequently, who shop across different categories when they can find an offer that is enticing for them. And I think what's so interesting to a lot of brands, especially going into a season like this where you have consumers who are looking for value, You have a lot of brands who aren't interested in the discount space, who aren't interested in offering coupons. There's brand devaluation associated with these things. But at Rakuten, this is really an incentive where consumers can come and get an exciting offer via cash back to shop more, buy higher value cart sizes with these brands, and shop more frequently through the holidays and feel really good about what they're doing because they're getting cash back.
Well, what are some of the retail partners that you work with? What are they saying about this holiday season coming up here? Because again, the retail sales today look pretty darn strong.
Yeah, they are strong, and they're going to continue to be strong. But I think the thing that everyone is aware of is that consumers are going to be looking for the best bang for their buck this holiday. And for retailers this year, especially coming out of the last couple of years where the focus was on top line spend. It was just ensuring sales, ensuring that the customer base that was loyal to these brands continued to shop with them through hard times. Gross margin kind of went out the window for the last couple of years. But this year, to date, it's been a bit of a back to health focus for most retailers and brands. But what I will say that we're hearing from nearly all categories and all brands and retailers is that they realize that this is going to be a very, very competitive shopping season where discounts and value adds are going to be central to what consumers are looking for to make their dollars go as far as possible. So brands are really focused on how to make sure to get the best deals in front of the best shoppers and meet them where they are this holiday.
So what categories are really moving these days? I mean, when I go into the holidays, I always kind of hear electronics, things like that. But what are consumers really looking for these days?
Of course, I mean, nothing's going to change in terms of what are giftable categories that consumers will be shopping this holiday. Certainly, electronics, certainly apparel. And certainly luxury. And I think that that's actually one of the more interesting categories right now because luxury tends to be one of those categories that doesn't really see a lot of impact from changes in the economy. And we kind of affectionately say that that's because the rich stay rich. But we're actually seeing some changes in the core shoppers who shop luxury typically, which is a good lesson to learn for really any brand heading into Q4, which is to say that with current economic challenges and consumers making different sorts of decisions as to where they spend their dollars, they need to figure out who is buying their products these days. What are the Gen Zers spending on, and how can they attract and engender loyalty to new shopper bases and categories who might not have been the traditional focus of their marketing spend?
All right, Julie, thank you so much for joining us. Really interesting conversation. Julie Van Ullen, she is the Chief Revenue Officer for Rakuten, not Rakuten. Rakuten.
Well, now I know.
Now you know.
But I mean, I've been using it all the time for.
All right, what is a pair of your boots that you just talked about? What's that going to set John Tucker back?
All right, so let's talk about John Lofgren boots, for example.
Okay.
If you go on Rakuten, you can go to the Speedway store and click into John Lofgren, and there you can find some engineering boots, handmade.
Sure.
In Tokyo.
Why not?
And I don't know, maybe you'll pay $1,000 or $2,000.
What?
But they'll last you forever.
Well, I mean, I don't have that long left. I mean, I don't have forever. Let's be honest here. All right, very good stuff. All right, let's head down to Washington, D.C., world and national news. Amy Marsh, save us.
I'll do my very best. Thanks so much, Paul. The House is voting again today on a new speaker. Hardline Republican Jim Jordan is edging closer to the votes that he'll need to take the gavel. We talked with Bloomberg's Jody Schneider in Washington. She tells us that he is gaining some ground, but it's not clear if it'll be enough ground.
He's still missing a number of votes. He can only lose 4. And last night on Balance of Power, Tim Burchett, a Tennessee Republican, told us he's down to around 8 votes that he needs.
Bloomberg's Jody Schneider in the nation's capital. President Biden is heading to Israel tomorrow to show solidarity and try prevent prevent the conflict from spreading through the region. That trip comes as American-led efforts to establish a humanitarian corridor to the Gaza Strip faltered, and we talked about that with Israel Bureau Chief Ethan Bronner in Tel Aviv.
I don't think we're seeing much yet. There's still talk about there's been water that turned on. There is some stuff coming in, and there is a small deal brewing to apparently let out some people out of Rafah. I'm assuming these are dual national residents or visitors of Gaza.
Texas wants to end protections for businesses that demand their employees get the COVID shot. State Representative Jeff Leach says businesses that don't make accommodations for vaccine deniers would then be forced to answer to the Texas Workforce Commission.
These countries are more enmeshed than they have been economically. So you're seeing, for example, exports from China to Russia have increased by about 57% just.
And clearly that was about Russia's and China's relationship. Former President Trump back now in a New York City courtroom today. His businesses are the center of a $250 million civil fraud trial. New York Attorney General Letitia James accuses Trump and the Trump Organization of overvaluing assets in order to get more favorable loans. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris, and this is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. A measure of risk appetite returning to the markets. The major stock averages, they've turned from lower right now to mixed. The data today pushing yields higher. Consumer spending coming in hotter than expected. In the meantime, neither investors nor the Fed seem to know the way forward with interest rates. At least that's according to Michael O'Rourke at Jones Trading.
That's the problem for the equity market right now, is if you have a 10-year yielding 5%, that's on par with the S&P 500 earnings yield, which again should have a risk premium tied to it. That's going to continue into year end.
And on the earnings scorecard, Goldman Sachs posting a second straight quarter of real estate write-downs and a continued deal-making slump. Shares down over 1%. Now, right now, Bank of America, after its earnings report, up 2.3%. That's the number one leader right now in the S&P 500. And HSBC is blocking staff from texting on their work phones, the latest fallout from regulatory probes into the industry's use of unauthorized communication methods. Right now, the S&P 500, 6 points higher. The Dow's up 72 points. The NASDAQ 100 down 30 points. That's down 0.2%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Matt Paul.
All right, John Tucker, thank you very much. Matt, John Tucker and I are proud natives of New Jersey, so that means we know malls.
Yeah.
We know shopping malls. When I lived in Summit, New Jersey, right across the street was the Short Hills Mall.
Which is a nice mall. That's the mall where you can get valet parking.
Yes.
It's a
Dude,
classy.
I can get valet parking at the Westchester. I could get valet parking at the City Center in Columbus.
Are you a mall guy?
I'm a lover of malls, yes.
Okay, I'm
both indoor and outdoor. But I reject the notion that you know more about malls being from New Jersey than I do being from Ohio.
Not even close.
You don't.
Oh, yeah.
You live near malls, but you don't go to them.
No, God forbid.
Have you been to the American Dream Mall?
No,
All right, you live near the most impressive mall probably in the whole country, and you've not been there.
That's a good point. That's a good point. Our next guest knows about this mall thing. Donna Blair, she's a COO of Pacific Retail Capital Partners, and these folks there, they invest in malls and all kinds of retail stuff. She joins us here. Hey, Donna, again, I'm a huge fan of the mall, kid of the 80s, all that kind of stuff. Where are we with the American shopping mall today? A lot of folks were saying, particularly with the pandemic, that business is dead. Where are we with that?
No, good morning, Paul. Good morning, Matt. Thank you for having me. I think that at Pacific Retail, we have a different opinion about malls. We look at the malls not just as is, where is, but really where are they going? And the future of the mall is not necessarily all retail. It really is this mall to mixed use approach where you look at the real estate, you look at the demographics, but more importantly, you look at the psychographics. Why is the mall important? Is it from a retail perspective, or really is it more about creating community and lifestyle? Mm-hmm. And our focus at PRCP is really being strategic in that approach and trying to really reposition the mall into more of a mixed-use asset that is going to have to evolve from just retail to being more that lifestyle and community.
So do you guys focus on the enclosed mall or the open air mall? Because Matt and I have had some retail investors come in and say, hey, the open air mall, there's a lot we can do with that kind of business. How do you guys view the market?
Sure. We focus on both. I would say a majority of our centers are enclosed shopping centers. But when you look at the plethora of real estate that an enclosed mall has in terms of the parking fields, the anchor boxes, it actually has a lot of real estate that can be repositioned. And so that ability to kind of pivot and change and evolve the asset is super important in terms of making sure that it's relevant. There will always be retail as part of a mall, but how do you actually reposition it? And they're a little bit more complicated when you look at the enclosed malls because you've got reciprocal easement agreements between the owners of the mall and then the anchor tenants, some of your major tenants, and also the municipalities. So they're going to govern everything. What are the uses? What are the parking availabilities, the parking counts? How tall, how wide? And it really is, how do you strategically unlock all of those encumbrances to create value in the real estate and reposition it? And that's how we're really focused on the mall-centric assets that we own, is just to do that, to unlock their actual value of potential for us as investors and owners, but more importantly for the community and the consumers too.
What are the main complaints, or what do you aim to change compared to a typical mall? Because as I said, I'm a huge fan. I love these indoor shopping centers and outdoor, communities as well. But there are issues, like they all seem to have the exact same retailers, which I guess those would be your anchors, right? I went to a mall in Berlin and noticed that they had the same retailers as the mall in Westchester. I don't need to have a Gucci, a Coach, and a Neiman Marcus in every mall I go to, So how do you make those kind of changes?
No, for sure. I think what we're focusing a lot is on that dynamic mix. There are less national tenants that are actually in the business these days. And so right-sizing the amount of retail and then creating that diversification is important. Local is key. We spend a lot of time in our leasing strategy really focusing in on local businesses, whether they're mom and pop restaurants or whether they're local retailers, and we put them together in collectives so that you can really get that local flavor. We find, the community is more interested in that because, to your point, it's something new, it's something different. You're not seeing it everywhere. But more importantly is that the community is committed to helping their own, to actually help bring those businesses to life and to support them. So that's a really important focus. You're seeing, obviously, a lot more food and beverage and entertainment because the experiential aspect of the shopping center is really super important. And is the way that we are going to be able to create that experience where our consumers come back over and over and find something different. It's all about that activation, the experience, and then that diversification of your mix.
Donna, with the cost of capital rising dramatically over the past 12 to 18 months, what are you guys doing in terms of your acquisition activity? Has that kind of made the economics a lot more difficult?
Certainly. The investor pool is a lot different, and we're not going to traditional institutional investors. We're really seeing a lot of individuals from the high net worth category, family businesses enter the market. We have actually found a little sweet spot in distressed. You were talking about New Jersey when you opened up, and we just recently acquired in May Bridgewater Commons. This is an asset that has really strong demographics, really strong psychographics, but really was in a distressed state.
So we were distressed mall in New Jersey. How about the Livingston Mall?
The Livingston Mall. Those are tougher assets to really reposition. Focusing on an asset like a Bridgewater Commons, we're really able to capitalize on the strong demographics there and be able to reposition it. So we look at a strategy that is more mall to mixed use and looking how do we bring densification. So that's residential, that could be for sale product, for rent product, it could be market rate, it could be senior living. And how do we really blend all of those different types of density strategies to drive traffic, but more importantly, to drive lifestyle back to the mall?
Hey, Donna, we had some really good retail sales numbers out today. What are your clients, what are they saying about this important holiday season coming up?
Sure. I think that we were all a little bit surprised by the sales this morning, especially when you look at the core sector, 3 times what the projections were. I think we have to caution ourselves that cost of goods are higher. And so when we look at the 0.7% increase, that there is still some consumer resilience, which I think is super important looking into holiday, but there also is, there's a lot of caution, headwinds that are happening here. Credit card debt is climbing. We have a lot of defaults. We're seeing the highest in 11 years. We're also seeing that student loans are now having to be paid. And so that's going to put pressure on holiday sales. I think that when it comes to gift giving, people are still going to be spending the money, but they're going to be looking for the values, and they're also going to change their trends. They're not just going to be from Black Friday, until the day after sales. They're starting earlier, and certainly with Amazon last week, we saw that in growth.
All right, Donna, thank you very much for joining us. Really appreciate getting some of your thoughts there on the greater retail business, the shopping mall business, the pride of New Jersey. Donna Blair, COO, Pacific Retail Capital Partners. More coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. Defense stocks have been rallying since last week amid the Israel-Hamas war. Lockheed Martin reaffirmed its earnings forecast for the full year, even as results from the aeronautics segment disappointed. We have more from Bloomberg's Isabel Lee.
Revenues fall 5% year over year, with the company saying that F-35 fighter jets faced delivery delays. So estimates were around 3.8% decline year over year. And a Pentagon Contracts Management Agency told Bloomberg that parts shortages continue to cause production inefficiencies.
Shares right now up about 2.5%. As strikes continue among workers of Detroit's big three automakers, the great-grandson of Ford founder Henry Ford is speaking out. Bloomberg's Courtney Donahoe has that story.
Ford's executive chair is calling on the United Auto Workers to end the strike. Bill Ford says if the work stoppage continues, it will hurt local communities. UAW President Shawn Fain says Bill Ford should call the company's CEO and, quote, tell him to stop playing games and get a deal done.
Now, Ford also warned that the longer the strikes last, the more it helps non-union competitors like Toyota, Honda, and Tesla. Ford shares right now up about 1.5%. And Tyson Foods is making a jump into a new trend in alternative meat, insect protein. Yes, Tyson says it's agreed to buy a stake in Netherlands-based Protix to diversify its operations. Now, the two companies will build and operate a U.S. facility that will produce bug-based meal and oil. Now, just so we're clear, it's not for us to eat. It's to be used as feedstock for the billions of chickens and hogs that it raises every year. Tyson shares right now, they're up about 0.5%. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Matt Miller and Paul Sweeney live here in the Bloomberg Interactive Brokers studio. Stocks turned positive here. Got a little green on the screen. S&P is up 0.25%. The Dow's up 0.3%. And the NASDAQ off just about a couple of points here. So a nice turnaround in the market coming off of the retail sales we got earlier today. Much better than expected. Yields, they're higher here. We have the 10-year Treasury up 10 basis points, 4.80 on your 10-year. The 2 years at 5.19%. That's up 9 basis points today. So big move up in rates here. Crude oil, WTI crude oil, we keep an eye on that. That's off about 0.5%, $86.17. Looking at the Bloomberg Dollar Index, off just slightly here. The BBDX is what we look at right now. Let's head down to Washington, D.C. World and National News with Amy Morris.
All right, thank you, Paul. President Biden will be in Tel Aviv tomorrow to speak with Israeli Prime Minister Benjamin Netanyahu as casualties mount in the ongoing conflict between Israel and Hamas. A ground invasion of Gaza by Israeli forces still appears imminent. The House is expected to vote on a new speaker soon. However, it isn't clear whether Representative Jim Jordan of Ohio can pull together the votes he needs to secure that position. Yes, the GOP has a majority in the House, but he can only spare 4 votes right now, and some Republicans are still concerned about Jordan. That vote should be coming anytime this afternoon. Texas wants to end protections for businesses that demand their employees get the COVID shot. State Representative Jeff Leach says that businesses that don't make those accommodations for vaccine deniers will be forced to answer to the Texas Workforce Commission.
I do not believe it is the right policy for us to allow employers to force upon their employees and or their applicants or contractors vaccines that they don't want to get.
The plan faces opposition from small business leaders who feel the COVID shot protects their workforce. And holiday season spending is expected to rise this year. More on this from Bloomberg's Karen Moscow.
A survey by Deloitte shows overall shoppers are expected to spend an average of $1,652 over the holidays. That's up 14% from last year. However, the survey found the increase is muted when it comes to middle-income shoppers. Deloitte says those with a yearly household income between $100,000 and just under $200,000 only plan to spend about 2% more this year, or $2,167, as college debt loans coupled with a lack of real wage growth makes this demographic less optimistic about holiday spending. Karen Moscow, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris, and this is Bloomberg. Matt and Paul.
All right, Amy Morris, thank you so much. We appreciate it. All right, Matt. As the buzz surrounding weight loss drugs gets ever louder, analysts at Goldman Sachs predict the market for such products could reach $100 billion by 2030, with Eli Lilly and Novo Nordisk leading the pack. Goldman's prediction is the latest in a series to foresee triple-digit billion-dollar sales in the anti-obesity market, fueled in particular by recent clinical trial results showing that Novo's Wegovy reduced not just weight, but also the risk of heart attacks and strokes. It feels like those weight loss
go
drugs
hand in hand. I don't understand those headlines. Like, obviously, if you lose weight, your chance of having a heart attack or a stroke is also reduced. But I think it's interesting that they put a number on it. So $100 billion by 2030 is what Goldman Sachs says these products are going to be worth globally. I was looking on the internet here and found from a company, Fortune Business Insights, a projection for the global weed market at $444 billion by 2030. So more than 4 times the amount. And I think these two things are working at cross purposes.
Exactly.
You know, because you take the Wegovy shot,
you lose some weight.
You have less desire for ice cream and cake.
Okay.
But then
you
take a gummy and you want to eat all the ice cream and cake, right? So I would be really interested, all joking aside, to understand how these two drugs work with each other.
Yeah, let's call up Sam Fazeli at Bloomberg Intelligence over in London. Let's see if he can do some work for us on that.
Yeah, or if there's a trial, you know.
If there's a trial, you want to participate?
If they need volunteers for a trial.
Exactly, there you go. Yeah, Barclays talking about an $100 billion market by 2033. So some big numbers out there on these anti-obesity weight loss drugs, I guess is probably the better way to phrase it. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Jody Laurie. She's a credit analyst with Bloomberg Intelligence. She follows all the hotels and all that kind of stuff. She's going to give us her thoughts on a potential for a deal in the hotel space, Choice Hotels and Wyndham. And then Robert Teeter, Managing Director and Head of Investment Policy at Silvercrest Asset Management, is going to join us with his market call. Angie Solanke, National Retail Director for Colliers, is going to break down those retail sale numbers that came in really strong here this morning. Get a little preview for the holiday season as well. Let's kick things off this hour with Denise Pellegrini and Bloomberg Business Watch.
Yeah, we've got a big intraday comeback for the NASDAQ. I'll tell you more about that in just a second. We check the markets for you all day long here at Bloomberg. It's 12:01 on Wall Street. Did you spend more last month than you thought? Because U.S. retail sales, they increased in September by more than forecast. And David Malpass, former president of the World Bank, says it's just getting tougher and tougher for the Fed to do its job right now because of rising deficit spending in the U.S.
They're an engine of demand that's sitting in the U.S. You know, we're talking about $2 trillion per year fiscal deficit. It used to be after a crisis like the COVID crisis, you would bring down the fiscal deficit, but this time it's gone up and plans to go up even more into the future. As you try to raise interest rates, it doesn't really get at this part of demand.
Yeah, and that's the problem, he says, for the Fed as it fights inflation. Malpass with us there on the Bloomberg Surveillance podcast. Fed decision, of course, expected November 1st. And don't forget, on top of the stronger than expected retail sales, we also had stronger than expected industrial production. Right now, the Dow, it is higher. We were lower all morning, but big comeback for stocks now. The Dow up 0.3%, 121 points higher. The S&P 500 up 0.3%, about 14 points higher. And the NASDAQ, it's the biggest intraday comeback, although still weak showing, but from where we were, yeah. NASDAQ up right now more than 0.1%, up 18 points. The yield on the 10-year right now, 4.8%. And also NYMEX crude and spot gold, we're checking on that. Crude oil right now down about 0.5%, 86.26 a barrel. And also spot gold, it's higher right now, up about 0.3%. Banks in focus. Bank of America shares up more than 2.5%. On stronger than expected results, we will be hearing from Brian Moynihan, CEO of Bank of America, in just a little bit here on Bloomberg Radio. Goldman beat on a couple revenue measures, but shares of Goldman, they're slightly lower. And that's a Bloomberg Business Flash.
All right, Denise Pellegrini, thank you so much. We appreciate it. In the deal front today, Wyndham Hotels and Resorts rejected a takeover offer from Choice Hotels, saying the proposal undervalues the company's potential for growth and would be subject to a lengthy regulatory review. Let's break down this deal or non-deal with Jody Laurie. She is the credit analyst with Bloomberg Intelligence, who follows the hotel industry, all the leisure industries from a credit perspective. Jody, thanks so much for joining us via Zoom here. What's going on between Choice and Wyndham? Are we going to get a deal done here? What's going on?
Yeah, so I mean, Wyndham kind of came back to Choice and said, hey, listen, we are... the words that they used were, it was underwhelming, highly conditional, and subject to significant business, regulatory, and execution risk. And the way that I read that and my initial take on the deal was, if they were going to go with the financing that they proposed, which was half cash, you're talking about $4 billion that likely would come from the debt markets. We put that into perspective about where the debt markets are now and where interest rates are. I don't know if you necessarily would like the cost of financing this sort of transaction, considering where cash flows could potentially be for the two companies.
What do you think the cost of financing would be? Are we talking like Carnival Cruise pandemic level costs?
No, I don't think they would be that high. We're looking at two companies. So Choice is BBB minus by Moody's and S&P, or Baa3 by Moody's and BBB minus by S&P. And then you have Wyndham, which is one notch lower. So it's the highest notch in high yield, which is Ba1 BB plus. And so those two companies together would probably command somewhere closer to what we've been seeing across standard sort of high yield rates.
What's the
now
number?
The question is,
we don't watch junk debt all day. What's the number? How much?
well, it depends when the transaction gets done because interest rates have been changing all the time. I mean, I think the key is
9%.
For this, the question is
double digits.
No, I think it's a little bit less than 9% at this point. I mean, I think if we're talking about, okay, so we're saying it's a $4 billion company. I think the big question is, for a company like this, you say, okay, $4 billion company, or $4 billion of debt, rather, for a company that combined would be about $3 billion in revenue. It's sort of like a weird scenario because you're like, okay, would investors really feel comfortable with that? Would they not? Are we looking at like a 7 or 8% rate like we saw last week with Norwegian? Are we looking, is it going to be a little bit better than that because they're a little bit higher rated? I think it would depend, where they decided to go in the yield curve, although
Right.
the yield curve right now is so flat that it doesn't matter.
So Jody, what's going on in the hotel space here? Why does Choice think that this is the deal to do here?
So I think what's happening with Choice right now is they're in a spot where they've improved their balance sheet. They are starting to generate cash. They're seeing that the larger hotel companies, such as the Marriotts and the Hiltons, are very interested in their space. They have sort of a commanding presence in the extended stay and budget area. That's where Wyndham operates primarily. That's where Choice operates primarily. Well, now Marriott and Hilton are saying we want a piece of the pie. And so they've been aggressively expanding into that area. And I think Choice is trying to stay ahead of that conversation by looking at Wyndham and saying, hey, here's two very large companies. Let's also be a very large company to compete with them.
So the budget hotel space, how is that different from, where Matt stays, the Ritz and the Four Seasons every time?
Well, if he wants to check in one of the Super 8s, let me know.
Okay. Is that a good business?
I do want to. I got to say, I was just about, before the flood a couple weeks ago, to drive to Ohio, and my dream was to bring my daughter along, and we would stay at a Motel 8.
Really?
Because that's what you do on
Motel
a road
6.
trip, right? It's such a cool thing. Little kids, I remember when my dad took me to stay at a Hojo's or a Motel 8 or whatever, and it was like awesome then. It didn't happen because of the flood, but these brands would be, they would have Days Inn, they would have Ramada, they would have Super 8, right? That's not to be confused with Motel 6. So they have like a lot of really cool brands that are still named after big automobile engines of back in the day. Are those like popular? Are they profitable?
Yeah, they're certainly profitable. You see cash flows generated. So the two companies each, they generate, you're talking somewhere in the 300s range for Choice, what's to be expected for 2023 or 2024. And then for Wyndham, you're expecting 400. At least that's what our MODL screen shows for consensus estimates. That said, I think it's a different sort of, when you talk about the structure of the company, it's a different sort of concept to stay at an extended stay than it is to stay at the, high-end resorts. You're looking for a different feature. A lot of people who stay at extended stays are staying there for different reasons. And also the definition of extended stay can be different among companies. So some companies like Wyndham will say extended stay, we really mean extended stay. You're doing a renovation on your house and you have to stay somewhere else for a little bit of time. Other companies say extended stay is more on the, competitor to Airbnb type.
So how has Airbnb kind of impacted your industry, the hotel motel business, just in general?
I think, what's most interesting is that the companies have had to reconsider how they do their business model. There's going to be consumers who always stay at hotels for whatever reason, whether they're dedicated to insert your favorite reward system. But then there's going to be people who are looking for the cheapest alternative and the most convenient alternative, which during the pandemic, we saw much more of that. We want a kitchen, we want this, we want that. That's going to come with this stay. We just don't want a small hotel room, particularly if we're trying to stay away from other people. That might shift a little bit more now that we're getting back into the quote unquote normal times. You're seeing a little bit more pickup in business and conference travel. You know, we were actually just in Vegas last week, and the conference situation there is much more on the quote unquote normal side than
Where'd you stay in Vegas?
You know, a year and a half ago. I'm sorry, what'd you say?
Where'd you stay in Vegas?
Oh, I stayed at the Venetian because that's where the conference was.
Paul's
Yeah, it was the big.
I'm a Bellagio guy. Next time you can go there, use my name.
Yeah.
They'll take care of you.
So you know what?
No, the Bellagio is beautiful.
Yeah.
You know, just while we're playing with hypotheticals here in terms of the debt, would they, with this kind of deal, sell debt in the market, or would they go to a private credit place and get a loan there? Because now we're starting to see deals. I think we saw a $5 billion private credit deal, and the idea is that these numbers are going to keep growing. So they could handle this. What do you think?
I think we're a little bit in early stages to figure out how they go financing. Choice did indicate that they
just thought it would be fun, Jody. Would it be an option?
I mean, Choice. Yeah, I know. I mean, it's definitely, anything's a possibility. Let me put it that way. Anything's a possibility. That said, Choice indicated that they are working with two banking companies that, you know, two bankers that said that they could give them financing, you know, give them short-term financing while they go and secure longer term. That said, yeah, I mean, the public markets, it's really a question of timing. So companies come to market and it's terrible timing and they get these horrible rates like we saw with some of the other companies I cover. Then they'll come to market, they'll get these fantastic rates. So it really is just a matter of timing, and it's a matter of how comfortable people are with the deal. Now, in normal times, the lodging industry is usually pretty sleepy. People aren't super excited by it unless there's some sort of transaction that happens. Then it becomes a little bit more interesting. Normally, the bonds don't trade all that much for lodging. So this is the type of thing they say, oh, we can wake up from our beds of lodging and decide to really care about that was my terrible way of making some sort of analogy. It was E for effort. But companies can, now we're starting to see that their bonds are a little bit more volatile today. So it is exciting. It's unlikely that, for the Wyndham bonds, it's a negative per se. Although, it's really a question of whether or not the change of control gets triggered. I don't think it would, in which case, the bondholders are kind of taken for a ride. So it'll be an interesting thing to play out. I don't really know how much more it's going to go, though.
Yep. All right, we'll stay on top of this deal. When we get anything else, we'll get back to you. Jody Lurie, she's a credit analyst for Bloomberg Intelligence following the lodging industry. And again, a potential deal here in the lodging business. Choice Hotels taking a look at Wyndham Hotels, and they're jockeying back and forth on price. We appreciate getting Jody's points. Looking at these markets here, we've turned decidedly positive here. We got the S&P 500 up 0.3%. The NASDAQ also positive, about 0.1%. So a nice rebound off of the declines from the morning. Let's check in with Bailey Lipschultz. He covers the markets for us. Bailey, what are you looking at in these markets?
Yeah, we are trading higher. More than 80% of the S&P 500 in the green. The NASDAQ 100, about 2/3 of the components trading higher. So that's flirting with going into positive territory. A lot of investors just trying to digest the economic data we've seen paired with corporate earnings, but quite the reversal. Looking at the underperformers, though, the biggest drag on the S&P 500 is still NVIDIA after the news that the U.S. is restricting their made-for-China chips in a new sale rules. So you're seeing still weakness for the company and some of those peers, but Philadelphia Semiconductor Index, ticker SOX right now, only down 5 points. So quite the reversal. Investors putting money to work, and when you look at kind of the divide and spread we've seen across some of these large caps, Tesla up 1%, Meta up 0.8%, but NVIDIA, again, down 3%, and Eli Lilly, which obviously is riding that weight loss drug and some of the Alzheimer's craze, down 1.7%.
All right, I mean, you look at oil here, I mean, I just don't have a good feel for where it's going. I think, I always think that oil is one of the toughest commodities to kind of forecast. It's all over the place, but the stocks have been generally pretty decent. People say...
you got OPEC Plus basically acknowledging they want to keep it around 80 or higher, right? They cut supply every time we could drop lower. So, and then you've got the unrest in the Middle East, which just makes things even more unpredictable.
Yeah, exactly right. I'm looking at ExxonMobil, just, Bailey is kind of a bellwether. Stock's flat year to date, so it's up 13-14% on a trailing 12-month basis, but I think investors are kind of asking the question, has this energy trade played out, or do we have more to go?
No, I think that's the key focus. And when you're looking at the energy index within the S&P 500 S5 ENRS, year to date up 3.5%, and that kind of compares if you're looking at crude so far and how it's been trading this year, which is up a little more than 7%, just uncertainty. And one of the big things has been being able to put cash to work and where those better investments are. EQT Corp is ticker EQT up 30% year to date, but on the flip side, you've got Chevron down close to 7% year to date, Kinder Morgan down 4%, ticker KMI. So I know Matt doesn't love the word bifurcation, but it does continue to be.
I love it, but I'm sick of hearing it after surveillance because they say it so often on that show, you know? Like together with resiliency. Those are the words that they use.
Resiliency? And you like resilience?
Dude, just resilience. There's no reason to say resiliency. You don't sound any smarter by adding another syllable to the letter.
And you can't
say
the word. And you can't say proudful, can you? It's pride.
Pride.
Right. He's a proudful man. No, he's a proud man.
I guess. You
can't say
prideful?
Prideful? You can't say prideful.
I don't know.
I think it's.
But resiliency is totally unnecessary.
You're out on that one.
Bifurcation's okay. I love a dichotomy as much as the next guy. You know.
I will say I use the word optionality far too often in my regular day, and my fiance does not like when I use it. She's like, "Speak English, dude. You're not talking optionality."
But all right, I'm looking at Birkenstock here. We IPO'd this thing at 46. Stock's 39. I don't know about your IPO market here, Bailey. I'm not really impressed with what's happened since Labor Day.
It's been bad, and we've seen the top performer is Klaviyo, ticker KVYO. Since it's priced at $30, it's only up 7.7%. So ARM's up incrementally. Birkenstock down now only 15% from where it priced. And mind you, that's an IPO that priced just below the midpoint of the range. So when I talk to lawyers, bankers, and investors, a lot of cautious optimism, a lot of uncertainty around the demand for new issuance. Whether we see companies going out ahead of a potential government shutdown in about a month is going to be closely watched. And if the companies that had been lining up IPOs for the fourth quarter actually hit the gas pedal and go this year, will be under the microscope again, just given the fact that the four marquee IPOs we've seen this year have broadly underwhelmed, and we haven't really seen a lot of investor enthusiasm since the day one pops that we saw with the big three.
Yeah, it kind of goes to the issue of, if you don't need it now, maybe you wait. Although as a former banker, I was like, no, don't wait, go now. Go when you can raise the money, not when you need to raise the money. That worked more times.
Well, the problem was they also had a strategy of trying to price the shares at a lower level in order to get a pop on the first day of trading. Birkenstock. Yeah.
Birkenstock was a weird one, but then you also talked to investors who were calling it pricey and pointing out the valuation. So
all right, very good stuff. Bailey Lipschultz covering all the equity markets for us. We appreciate that. S&P 500 up 0.3%. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. Bank of America traders reported their best third quarter results in at least a decade, while net interest income topped analyst estimates. This as Goldman Sachs reported trading revenue that beat analyst estimates. And Bloomberg Sonali Bosick says it's a show me the money kind of story.
What I mean by that, it's not just for investors, it is the capacity to lend. What helps Goldman Sachs during the quarter? This idea that trading revenue, both on the fixed income and equity side, was helped by their capacity to lend to the buy side. Call it Goldman's siren song to the buy side. They are open for business and they are looking to lend over some leverage. Over at Bank of America, net interest income was above expectations. They are lending to the consumer. You have Brian Moynihan saying that the consumer is still strong but slowing.
Right now, Bank of America shares, they're up about 2.5%, but Goldman Sachs right now down just a fraction. HSBC Holdings is feeling the pressure from regulatory probes into the banking industry's use of unauthorized communication methods. Now, sources tell Bloomberg that the UK lender is blocking staff from texting on their work phones, and it's in the process of disabling the SMS function on their devices. HSBC shares right now, they're up at just a fraction. And the battle is on to receive streaming rights to Taylor Swift's concert film. You knew it was going to happen. Apple Insider reports Apple TV Plus has emerged as a serious contender for the Eras Tour as it competes with giants like Netflix, Disney Plus, and Amazon Prime. The film did incredibly well at AMC theaters, pulling in more than $95 million domestically. Right now, we have Apple shares down a fraction, same for Netflix right now. Those are the company stories we're following this hour. I'm Lisa Mateo. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 12:21 on Wall Street on Bloomberg Markets. We check the markets for you all day long here at Bloomberg. Stronger than expected retail sales numbers and stronger than expected industrial production numbers for September out today. And investors are shaking off concern about more rate hikes from the Fed. But Bob Dole over at Crossmark Global, well, he says he doesn't think the Fed is done hiking interest rates. And he warns that is potentially extra dangerous because he says the previous interest rate hikes from the Fed, well, those could still kind of bite us in the back, he says.
More important than when if the Fed raises rates again is what about the impact from 0 to 5.25 in the last 18 months? We have not seen the full impact of that.
And all with us there on the Bloomberg Surveillance Podcast. Right now, the Dow is up about 0.3%, up 96 points, close to session highs. Remember, we were lower all morning. S&P and NASDAQ also higher. S&P up by 0.3%, up 13 points. The NASDAQ up about 0.1%, up 18 points. The yield on the 10-year right now, 4.8%. Spot gold right now, it is higher by about 0.3%, we'll call it, at $19.25 an ounce. Crude oil, it is lower, down about 0.3%, little over $86 a barrel right now. NVIDIA shares lower. The U.S. restricting the sales of chips that NVIDIA designed specifically for the Chinese market and curbing exports to 2 Chinese artificial intelligence chips firms. And that's casting a cloud over pretty much the whole chip industry today. And that is a Bloomberg Business Flash.
All right, Denise Pellegrini, thank you so much. We appreciate that. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube. So head over to youtube.com and search Bloomberg Radio. You know, one of the challenges for equity markets has just been kind of what this Federal Reserve has been pretty consistently communicating, which is higher rates for longer. And the question is, how can equities perform in that environment? Let's check in with our next guest, Robert Teeter. He's head of investment policy and strategy group at Silvercrest Asset Management. And Robert joins us in our Bloomberg Interactive Broker studio. We appreciate that. So, Robert, how concerned are you about the ability of equity markets to move higher in what appears to be a higher for longer rate environment?
Well, I do think we're a little bit constrained here in the short term with inflation coming down, but not fast enough for the Fed, and the Fed telegraphing that rates will remain this high for some time. Looking at the futures markets, it looks like the 10-year is reflecting what we see for Fed futures out about a year at around 475, 480. So only a little bit of cuts next year. So we do think there's a bit of a lid on valuations, but this economic news has been pretty strong, and I think that creates a window for earnings.
So we had the retail sales come in this morning, much stronger than expected. I mean, I guess that's a sign that the consumer's in still pretty decent shape. Is that your take?
It is. I think there are a lot of signals converging to tell us that the runway on the economy is a bit longer than expected. In the short term, that's sort of giving this good news, bad news thing where rates are going up a bit higher. But I think when we look out to next year, the stronger consumer, stronger economy, that's good for earnings. And I think ahead to next year, rates are probably stabilizing a bit, and the earnings picture looks pretty decent.
So what are you learning? I mean, I guess we're just kind of in the midst of kind of getting into the earnings for this quarter, but the big banks reporting, and obviously they had great net interest income as you would expect. What are you looking for this quarter that we're going to just kind of getting into?
Yeah, so far so good. I think surprises have been a little bit ahead of expected, and more so on the earnings side. So that tells me that margins are hanging in there pretty well. That's the big signal I'm looking for. Last quarter, there was a lot of evidence of productivity-enhancing technologies flowing through company earnings. Companies actually pointing to real changes they've made. I think that's encouraging. We'll look for more of that and look for more data on the consumer. And thus far, what we've heard from banks is that the consumer is in pretty good shape.
All right, so Matt, of course, he was long Magnificent Seven all year, so he's scoping out properties in France and whatnot. The rest of us, are struggling here to kind of get some performance here. What do I do here? Do I chase those tech names that have performed so well, or do I try to find some value out there?
Yeah, I think it's smart to be patient here. I do think that it will take some time, but
which has been a real issue for this market, and then just got ratcheted up at another level last weekend with what's going on in the Middle East. How do you kind of factor then, if at all?
Yeah, no, we do factor it in, and it's certainly gotten worse. So we include both a geopolitical and a domestic policy module in our valuation framework, and both of those have gotten worse. We've gone from sort of one issue on the geopolitical side to two, so that has gotten worse. But in the broader historical scope of things, that tends to be a relatively modest influence over the longer term. So we are factoring it in. We are paying attention to it. I think as long as it doesn't escalate further, markets have pretty well digested it here.
Speaking of escalation, we've seen, I would have thought post-pandemic we would stop massive deficit spending, but it seems that we're not. And even it looks like it's even getting higher now this year and maybe next year. Does that concern you? Does that drive up rates? Do the bond vigilantes come back?
That is always a concern, and it's something that I think in most times it gets worked out very slowly over time. Slow economic growth and some stability in it. It's certainly a negative, and so when I look at the domestic policy scene, I don't see anything positive there either. But when we take into account, we use 5 different metrics in our module on valuation. 2 of them, inflation and interest rates, are likely to get better over the next year or so, and I think those weigh more heavily and historically have been more influential than what we see from domestic policy.
I mean, there's a reasonably good chance you're talking about Washington, D.C. We might have a shutdown. I mean, we don't even have a Speaker of the House yet. Hopefully we'll get something going on that today. But, I mean, I don't know what you do with that kind of risk. So how do you guys think about that?
Yeah, it certainly is a concern. And I think I would pair that with the short-term concerns on valuation here, of at least in my view. While the last few days have been a little more constructive, I think there is reason to believe there will be some volatility around both geopolitical issues as well as until we get past the debt ceiling issues a month or so out. So a little bit of chop in the near term, but I do think next year looks a bit better.
I mean, a shutdown, what's the alternative to that?
Do we do another continuing?
We just keep spending $2 trillion a year in deficits until it gets to $3 or $4 or $5 trillion a year. You heard what Neil Grossman said yesterday. Like the last time he looked in 2022, it was like a $30 trillion deficit. Now we have a $35 trillion deficit all of a sudden. Like it's getting out of control. And I don't know if you want to buy bonds at this level, but if it gets too bad, you could see rates go, Jamie Dimon's been saying 6%, it could go much higher.
It certainly is possible. I mean, one of the contexts that I put it in is the clean shirt and the dirty pile argument, which I think really does hold true today. If you look at what's going on in the U.S. in terms of economic growth, in terms of demographic projections over the next few years, things are quite a bit better than in other portions of the world. So while it is a major problem, and I'm not denying that it is, we are in better shape here, I think, than most other economies around the world. I think that helps bring Treasury buyers into the market.
Any reason I shouldn't just go buy a 2-year Treasury at 5.2% and just call it a day?
I think it is a very rewarding portion of the portfolio now, and it hasn't been in a very long time. So one thing we've been encouraging clients to do is basically get back to basics. So if you were taking either too much or too little risk, kind of get back to that North Star, get back to your fundamental midpoint, and start focusing on what the longer-term outlook looks like, because you are getting paid to sit in fixed income now. And so you're picking up a better yield, better to be back to balanced portfolios.
All right. The new AI, which I'm not fully buying in on the AI thing, but the new AI is this diet medication.
It's AI Junior. Obesity drugs.
Obesity drugs. I mean,
they're
now
going to
Goldman
change
Sachs
the way the world works.
Exactly. When you see a theme like that out there in the marketplace, do you tell your analysts, go find out where all the derivative trades are on these obesity drugs?
Not usually. I mean, most of those themes, in my opinion, are a little too overblown in the short term. But the impact that I do think it has is in the broader context of a lot of health and medical advances that we've had in the past few years that have gotten sort of looked over because of COVID. So all the focus has been on COVID. There's been a lot of progress in medical technology, the weight loss drugs being one of them, but other deployments of AI and things. And so if that points to longer and healthier lifespans, that's good for the economy. That's good for demographics. That's how I digest the information.
Are you going to go get it?
I'm going to get it as soon as I can, but I don't want the shot. I want the pill.
You want the pill?
I don't want to inject myself. Yesterday I got 2 shots, and it still hurts.
Were you brave?
I was pretty brave. I almost got up and left when she said, I went to the CVS. My wife had made an appointment for me. And the lady said, we're going to do flu and COVID. Nice. I said, we're doing both?
Yeah.
I almost snuck out.
You toughed it out.
Yeah.
All right, you're all the better for it. All right, Robert, what's kind of your theme here as we kind of finish out, we get into the fourth quarter of 2023. What's kind of your investment theme here?
My main theme is earnings, and so don't look for any valuation expansion. Follow the earnings. I think there are a few sectors that have good earnings growth in the upcoming year. Consumer discretionary with a growing economy still looks pretty compelling. Industrials look compelling with some of the reindustrialization in America, and technology looks pretty strong as well for creating earnings growth.
So technology, I mean, is there an AI component to that, or are you just like, I like my Microsofts, how do you?
I think it's just ongoing continued earnings and revenue growth out of those companies. And so in a slow growth world, which I think we'll be in next year, there's a willingness to pay up for growth where you can get it.
But do you have a recession in your 2024 outlook?
I do not, no. I think we're headed to slow growth, but not recession for next year.
See? All right.
That's made Paul so happy because he's in the soft landing camp as well. But I mean, there must be a high chance of a recession, right? Considering all the money that everyone's spending on credit and how much that credit costs.
There absolutely is. So anytime you're running at a lower growth rate, which I think we will be next year, there's a risk of an exogenous shock pushing you down, or just perhaps more drag from the financing situation and higher rates for longer than we've been modeling in. But I think it's more slow growth than recession.
All right, Robert, always good to check in with you. Robert Teeter, he's head of investment policy and strategy group at Silvercrest Asset Management. We are agreeing on the screen right here, kids. We turned around. We were kind of negative this morning a little bit, but we got the S&P 500 up 0.4%. Same for the Dow, and the Nasdaq's up about 0.2%. So a solid turnaround there. Let's go to New York City. Dan Schwartzman, right here in our Bloomberg Interactive Broker studio, because he's got world and national news.
Always a pleasure to be here with you, Paul and Matt. The House vote for Speaker moments away from getting underway. Of course, we'll continue to follow that story as it continues. Now, here's a big one. President Biden leaving for Israel tonight on a high-stakes trip to try to keep the Israel-Hamas war from expanding in the region. Biden's also going to head to Jordan to meet with King Abdullah II, Egypt's Abdel Fattah el-Sisi, as well as Palestinian Authority leader Mahmoud Abbas. Bloomberg's Oliver Crook tells us what Biden can expect.
He will be greeted very happily by the officials here and by the people here in Israel. And really it comes as, all of the officials here that have arrived have had the same sort of message, which is unflinching support for Israel. And we expect the same from President Biden. And that is unflinching support politically, militarily, and also possibly financially. We have some reports out from the New York Times that Israel has asked for $10 billion in emergency aid. So that will be in focus. But so too will deterrence and diplomacy.
That's Bloomberg's Oliver Crook in Tel Aviv. Hamas has released a 60-second video of Israeli hostage Mia Shem. The 21-year-old was kidnapped at the Tribe of Nova Music Festival where 260 partygoers were killed. Shem is seen lying in a hospital bed with a cast on her right arm after what she says was a 3-hour surgery. Police in Brussels have shot and killed the suspect accused of killing 2 Swedish soccer fans yesterday. The 45-year-old Tunisian Abdesalem Lassoud pledged his allegiance to the Islamic State and claimed responsibility for the shooting on a social media post. Reports say Lassoud had sought asylum in Belgium in November of 2019. Russian President Vladimir Putin is in Beijing to help mark the 10-year anniversary of China's Belt and Road Initiative. The BRI project has expanded China's influence in poorer countries by helping to build infrastructure such as airports, roads, and public works. The project has been criticized for saddling countries with enormous debt. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Dan Schwartzman, and this is Bloomberg.
Connection lost.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 12:41 on Wall Street. We check the markets for you all day long here at Bloomberg. Stocks are higher. We have stronger than expected retail sales and industrial production numbers. That has some worried about rising interest rates. Investors are kind of ignoring that warning. Scott Cronert, equity strategist, managing director at Citi US, says he's still optimistic, but visibility, he says, is a bit unclear right now.
So we've been looking for a solid Q3 earnings season, but given the geopolitics at work right now and the ongoing Fed and economic uncertainty, we've been expecting companies to be, let's call it a little bit more subdued in their outlook commentary. That said, we do think that we're setting up for a more bullish surprise in terms of earnings growth headed into 24.
And Cronert with us there on Bloomberg Surveillance. The Dow right now, it's up about 0.3%, up 97 points. The S&P 500, it's also up about 0.3%, up 13 points. And the NASDAQ up just about 0.2%, 23 points. The yield on the 10-year right now, holding steady, 4.8%. Spot gold right now up 0.2%, up just about 19.24 an ounce. And crude oil right now down about 0.2%, 86.46 a barrel. Retail sales, they picked up at restaurants, motor vehicle dealers, and also personal care stores. It's not just that, though, kind of overall bullishness about spending in retail. Shares of Chico's FAS, for example, they hit a 52-week high earlier today. That's according to the Bloomberg terminal, up about 0.4% right now. I got the blazer I'm wearing there today. Didn't spend much on it, though, but I guess a lot of other people are shopping there. And one more thing for you guys. New York pot sales, speaking of 52-week high, they hit $83 million. That's a record as more dispensaries get ready to open. And that is a Bloomberg Business Flash.
All right, Denise Pellegrini, thank you so much. We appreciate that. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're also streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Radio. We had some retail sales that came out this morning, really, really strong, suggesting that the consumer's doing pretty well out there. Let's break them down with Angie Solanki. She is a National Director of Retail Services for the United States for the firm Colliers. Angie, thanks so much for joining us here. Boy, it really took, I think, the market by surprise how strong these retail sales are. Help us put those numbers into perspective here.
Yeah, it's been a great surprise, actually, to see the consecutive, retail sales growth. So people are still spending, although somewhat cautious. But I think what they're doing is they're actually spreading the spend, if that's the best way to describe it. So instead of spending all of their, call it potential savings or savings for holiday items, et cetera, they're kind of spreading it out. There's been so many great deals. We've seen, Amazon with their second Prime Day here the last week. We've also seen Target and others follow suit in addition to having those types of deals. So there's definitely been some, increase from that perspective where people are saying it's time to maybe buy some of those higher price point items, but also let's just be cautious and be conscientious of how we're going to spend come fourth quarter.
To what extent, Angie, do you think that these retail sales numbers suggest maybe, or what do they say about potentially this holiday selling season coming up?
We're actually pretty excited. I think we're a bit bullish. I would say it's going to be similar to last year, if not maybe 1 to 2% higher. So just to give you some comparison, when we look at, the holiday spend for last year, just for example, during Thanksgiving, most people shopped in store, but they knew what they were going to buy. So the impulse buy was actually quite smaller. So there was about 197 million consumers that shopped just during the Thanksgiving holiday. So that's that Black Friday weekend all the way through Cyber Monday.
All right. So for the retailers, where are we in terms of the store experience? I mean, we had the retail sales, just really accelerate on the e-tail channel, people kind of shopping online, and that trend seemed to be accelerated during the pandemic. Where are we now in terms of how consumers buy stuff?
Yeah, I mean, they really like to buy stuff in stores for the majority of them. And so we definitely have seen a lot of the sales that we've seen in terms of sales growth has been from in-store sales, so in-store shopping. People still want to be educated, they want to touch, they want to feel. It's just human nature. Of course, we want the convenience of all these different channels, but we're still continuing to see retailers expand. You probably, I don't know if you've been to the Petco in Manhattan, but they have self-serve adoption, they have self-serve grooming for your pets. So people want to have those experiences, and we're going to continue to see those retailers continue to expand. I mean, we're seeing it already with Primark, Ross Dress for Less, and others.
So I guess a discussion point within retail over the last, I don't know, decade plus has been in the United States, there's just too many stores, particularly department stores. Where are we in that story here? Because I've actually seen some, retailers say about they're expanding their physical footprint. And I thought we were just overstored in this country.
Yeah, it took me by surprise as well. I think I mentioned before, is that we're about 23 per square foot per person, which is quite significant when you compare us to, the European market, which is around 7 or 8. But I think what we've seen over the last, call it 10 to 15 years is a right sizing of retailers' portfolios. So there's much more information, much more data that's being driven through different channels, online purchases, in-store purchases. So the consumer is giving us data, or the retailers data, for them to get much more, I guess, what I would say, optimize in their store footprint. So they're able to say, hey, if we go into this new market or we go into an existing market, can we create a hub and spoke model where maybe this is a larger store, it will have micro fulfillment, it will have the ability for people to buy online, pick up in store, etc. So, and then we can fulfill from that store into some of our satellite stores. So there's a lot of thought being put through as the retailers are looking at their expansion strategies.
Where are we, Angie, in terms of the supply chain and inventory? If I go into a store, if I actually find myself going to a store, which I'm going to try to avoid at all costs, am I going to find the thing I want on the shelf?
You should. I mean, I think the supply chain, those issues are behind us.
Okay.
What may occur, though, is you may not see it if that product isn't a top seller. And hopefully, if you're not going into stores already, that means you're going to be shopping online, unfortunately.
Probably. So, I mean, now, what's the inventory strategy for retailers these days? I mean, one of the things I guess we learned in the pandemic, or was just kind of really highlighted, was maybe that just-in-time inventory thing maybe isn't always the right way to go. Maybe we need to be a little bit more flexible. I mean, but is that the case in retailers? Are they buying it ahead of this holiday season like they typically do?
They definitely are. I mean, that's a must. And so in order to make sure that they're still, providing the best product to their consumers and shoppers as quickly as possible. But as I mentioned earlier, talking about data. So these retailers have so much information as it relates to SKUs. So product types, what's selling, what isn't selling, how much is selling, how much is being returned, and where is it being returned. When you take all those different ingredients and you put it into that recipe, it's going to provide you with some good information or a good item. So I think they have enough data to allow them to figure out how much inventory they need to purchase in advance. I think it was very difficult during the pandemic. And so they did see that challenge, right? We saw over inventory, we saw discounts, etc. So I think that's behind us now, and it's been quite optimized going forward.
What's the promotional environment going to be like this holiday season? Are we going to get some deals, or do the retailer maybe have some more leverage here?
It's really fascinating. I think I've seen probably the most deals because I've been, call it secret shopping as I monitor what's going on in the industry. So I've been just kind of tagging myself to different retailers from an online perspective. And the amount of online deals that I receive is outrageous. In store, I see a little bit less, but online, I get constant customized, little bursts of email saying, hey, if you go in now or bookmark this, you'll actually get an extra 20% off. And we're anticipating that most people that are looking for deals, whether they're in-store or online, are bookmarking these deal tabs, and they're ready to strike. So we hope to see another slight bump in our sales forecast going forward.
all things retail. Angie Solanki, thanks so much for joining us. She's a National Director of Retail Services for the U.S. for Colliers, giving us a real peek at what's happening in the world of retail sales.